YouTube here. Morning, Rob, Pete, Sid, Jeffrey. Nice to have you. Good to have you guys here. Hope everybody's doing amazing today. Ready to hopefully get some work done, get some movement in that market today. Today is Tuesday, December 10th, and you crude oil traders, OPEC meetings, medium impact all day long. Great reason, like you should need one, to make sure your rules are met. Keep your management hat on. If you're still going to choose to trade crude oil, because those OPEC meetings can affect it, can make it jump, bump, and spike. So every morning we come to forexfactory.com/calendar. We review it together. Drop a note on your desktop or something anytime you see high impact or medium impact news. There's really nothing else going on today, so we're just going to trade as usual, talk about what we do, all that fun stuff, and everything that we talk about, you know where it comes from. Right from the Nexgen page, guys. NexgenT3.com. Go to education, click on trading guide. This is where all your answers are. Everything that I talk about comes from here. There's no secrets with Nexgen. We don't hold back from you. I'm going to give you everything that you need to be successful with the software before the day is over. I do it every day. I do the exact same thing every day. And guys, I'm telling you, trading isn't about variety. Trading isn't about finding every move in the market or being in every swing or capturing every tick. And trading isn't about being active, guys. Trading is about being patient and waiting, just waiting for the best of the best. And that's how the successful day traders do what they do. I'm going to go to the facts, the common terms here, guys. This is a great page to go through just to get comfortable with some of the language that we use, if you're not. But the thing that I talk about every day for the first hour, and man, I beat this horse dead, and then I continue to beat it. We talk about this high probability trade, guys, and this is defined when each indicator on every chart agrees for the rules for the trade. This is when triggers are their strongest. No termination conditions exist. There's no trouble spots between you and your target. Guys, the way it's taught in this room every day in the first hour, this is a trade that typically wins 70 to 80% of the time. And there's this awesome saying that says confidence comes from the memory of success. And I believe that. Oops, sorry about that, Rob. So your job is to figure out why you gave it back. What did you do? And then this morning, you choose not to do it. That's how trading works when you're learning. Guys, this trade isn't your only trade. This isn't your home run trade. This isn't your gonna see it 1,000 times a day trade. Guys, this trade, it's taught first in this room because this is the trade that teaches you to read your indicators. And it's funny, I know a lot of you that have been in my room for a while are probably mouthing out the words for what I'm about to say. Guys, chart reading, reading your indicators, doing nothing is 90% of your day every day. 90%. We do an extraordinary amount of nothing. As day traders, it's like we're professional waiters. We're just waiting for advantages. Hey, Wayne, good to see you. 10% of our day is typically spent trading. So if you pledge 6 hours to sit in front of this computer screen and look for trades, guys, the likelihood of you being active more than 36 minutes of that 6 hours is low. I mean, that's just what trading is. And this aggravates people. Morning, Crypto. Good to see you. It really does. It aggravates all you blue-collar, alpha male, gotta keep busy kind of people. And I'm telling you, less is more when it comes to trading. Because once you learn to read your indicators, and more importantly, once you learn to commit to the advantages that create a trade, guys, you're going to understand with pretty serious accuracy where the market is likely to continue. Initially, this is your entry for the highest probability trend trade. As you grow with the software, that's going to be your entry for those high volume area trades. It's going to be your entry for those momentum trades. Guys, where the market is likely to continue is going to play a very big role in your day trading. You're also going to understand where the market is likely to go. This is going to help you as you begin to create your own personal management plan. Because if you know where it's likely to go, you know where to put your targets. And then finally, you're going to understand where the market is likely to stop. We all hate these likely to stop areas because they impede our forward progress. These likely to stop areas are what we refer to as termination conditions here with Nexgen. And a termination condition is essentially just where the people that are in control are making decisions. And more often than not, it kills your trades if you trade into them. So you're going to learn how to identify them today. Hey, good morning, Mike. 2 hours, 160, 80 bucks an hour. That's not so bad. Takes a lot of patience. I'm down about 300 as I come into class today. I got caught and talked myself out of a winner and talked myself into a loser. Rules met, but no, it happens. Guys, that's part of trading. Being down $300 isn't the end of the world. It just means that a couple things didn't work out. I got caught in a little consolidation before the NASDAQ dropped, so it was hard for me to take my full profits. And then two of them didn't work. Two perfect trades didn't work. It's no big deal. It doesn't faze me, and you'll get to the point to where it doesn't faze you. And the way to make that happen is to insist on advantages, guys. Insist on having your rules met, because if you do the study, you're going to learn to trust these rules. You're going to have faith in these rules. And you're going to realize that trades don't work sometimes. But if you take the exact same trade 100 times, especially if it's this high probability trend trade, guys, you have the potential to win 70 or 80 of those, which means that you got to lose 20 to 30% of the time. It's just welcome to day trading. This high probability trend trade, the way it's taught each and every day, the way Nexgen has presented it for decades at this point, is only 3 rules. Each rule, when it's true, when it's met, provides an advantage. And a trade, it's like this little equation down here, right? A trade is momentum, clear path, and entry. 3 rules being met, 3 advantages in play. That's when it's time to take a trade. If you don't have the equation, well, then it's not time to take a trade, new users. This is your safeguard. And what I want you to do is I want you to learn to talk to yourself every time you're looking for a trade. I don't care what kind of trade it is. Do I have momentum? Is there a clear path? Do I have an entry area? Guys, and if you answer yes to all these, then it's time to take a trade. If you answer no, it's either time to avoid trading at all, brand new users, or when you get a little more experienced, you put that management hat on. You manage aggressively through your ability to read your charts. So these 3 rules, these 3 advantages happen on only 2 charts. We use a big chart and a little chart, guys. Large chart, small chart. Your large chart leads the way. Large chart drives the decision-making process. Large chart tells you what you need to know before you ever look for an entry. The large chart will define the direction of the market. The large chart will define the momentum in the market. And the large chart will define the areas that may be problematic, those likely to stop areas, those termination conditions, guys. Rules 1 and 2 are met on the large chart. Rules 1 and 2, momentum and clear path. Those happen on the large chart, and only when those rules are met will you turn your attention to a smaller, faster chart. That big chart's like a broad stroke of a brush. It's like a giant roller, and you're just going after the living room wall. This small chart is a refinement process. A small chart takes the most current bar on the large chart that's defining direction, momentum, and areas, and it refines it to 15 to 30 bars. And what this smaller, faster chart, this smaller chart is going to pinpoint where the market is most likely to continue. You're going to be able to pick that out. You're going to have a recipe to do it. And by using this refinement process, all of these bars inside of this one bar, guys, risk is reduced dramatically. The distance to your profit targets grows exponentially. So let it be 2 charts. Let the large chart lead the way, because the large chart is the large crowd. And this is the who are you trading with or against picture. The large crowd, guys, these are the guys that wake up and say, hey, the market should go up today, and they make it go up. And they say, you know what, let's put a little momentum behind that market. And they create that momentum from rule number one. And the large crowd, these are the guys that react at those key Fibonacci areas that can behave as termination conditions, guys. The large crowd, just latch on to them. Do what they do. And I've got a picture for this. I want to share it because I feel like it's time. This is your large crowd, your apex predator. I want you to think of yourself, I'm just the remora, right? And if he doesn't kill something, I don't eat. So I wait. I wait for the people in charge to give me what I need to find a trade. And that's them providing momentum and them providing that clear path. And then there's these smaller crowds. And man, these are a bunch of yahoos. They love to fight. And what they do is when the large crowd says, let's go up fast, there's nothing in the way. These guys go, hey, I just stole a little money from my uncle, let's push it down. And they push it down, but guys, they fail. They fail typically 70 to 80% of the time. Your rules are designed to pinpoint their failure spot to get you into the market where the trend is most likely to continue in the direction with the large crowds. So ask yourself, who am I fighting? Who am I trading with? And going with the flow is always the easiest thing to do. So what we're going to do this morning, and I do this exact same thing every morning, guys. There is very little, and I mean very little variation to my first hour. And that's done for a reason, because repetition makes things stick. And repetition is what creates the recognition. So there's a step-by-step path to becoming a confident trader ASAP. This has been in play. This picture has been around for at least a decade. And it starts with posting your trades in class. Nexgen's been running a live chat room for as long as I can remember, at least 20 years. And the idea has always been that this is an avenue for you to present each and everything that you do and get feedback on what you're doing great and what you're having challenges with, and get input on your entries and your exits. And every day you get this live feedback to help you grow a little bit, to get just a little bit better than you were. So take advantage of it, guys. Posting your trades in the class, this is how you're going to get to where you want to be. This is where you're going to get the feedback. And one of the things that I do is I recognize patterns in you, right? So maybe Ron posts 3 or 4 pictures in this room, and 3 or 4 of them all trade in determination conditions. Well, then I know as the teacher in this room that Ron needs some help with termination conditions, that he needs a better understanding of the impact that they can have on his trading. And we work together to identify and to eliminate that problem from his trading, guys. And that's what we're going to do. Every trade that you post in this room is like getting a private session. You'll get everything that you need out of me in this room. The second thing is track your real-time performance in a spreadsheet. And the spreadsheet used to be and it was just that. It was a trade tracking sheet. And this is where you put in your trades and you talk about your advantages. And the most important thing is the feedback from class. So if you post in this room and maybe I point out a problem with your read, or your entry's early, or it's late, or maybe it's just everything is perfect, and I say, gosh, don't miss this one, it's amazing. Guys, put that feedback into your spreadsheet, and what you're going to do is every morning you're going to come back and study what you did yesterday. Who made a mistake yesterday? I did. Yesterday trading, I took 2 early entries. They were the right entries. They were just a little earlier than they needed to be, and they kind of took away from my day. So this morning, the one thing I said is, okay, no early entries. So before I even took my first trade, I was focused on how I could do it better. And that's from what didn't work. But what did work were all the great entries, being patient, waiting for the entries. So today I was focused on that. Wait for the best entries, guys. And that was my little 1% that I was going to be better today in my trading. And you're going to find that when you're following rules, when those advantages are in place, it feels easy, it keeps you relaxed, and you're gonna recognize when it feels forced. If you take the wrong entry, you're gonna get nervous, and you're gonna move your stops, and you're gonna exit trades that you shouldn't be exiting, or you're gonna be moving stops where they shouldn't belong, and you're gonna be adjusting targets. And this little study every morning is gonna set you up for the day. So that's how you get to where you want to be. we're going to learn the rules for when it's okay to trade. And for me, it's a non-negotiable. Either my rules are met or they're not. And if my rules are met, I'm obligated to take that trade, no matter what my gut tells me. Because I've studied my rules, I've practiced my rules, I have presented my rules to my mentor to make sure that they're solid, to get feedback. And guys, I know without a doubt that my rules have been proven to win more than they lose. The exact same way that if you do the study, you'll understand that this high probability trend trade can be proven to win more than it loses. Simulate and practice. Please do not wait until you think you're good at this to start practicing, guys. On the simulator, you can practice entries, you can practice exits, you need to practice working with NinjaTrader, scaling your charts and moving stops and targets, guys. Get the practice going instantly, really get it going fast, and then every time you take a trade, every time you have a question, every time you see something that doesn't pop off the page and make sense to you, take a picture of it. Put it in the room and say, Mark, can we talk about this? I don't understand what this line is. I don't understand what these triggers mean. I'm not sure if this is momentum. Can we get a little refresher? And guys, I promise you, we'll do it. The goal is that you're always practicing the correct rules. And you're not going to be in the beginning. You're going to break all the rules. Guys, welcome to being new at something. You are going to smash things and do it wrong. And you're going to take the wrong entries and all that stuff. And that's outstanding. Because each and every time you do it wrong and you present it in the room, we're going to talk about the fix to do it right. And then finally, we're going to simplify. I think personally that you should never even go outside of the high probability trend trade until you know it's second nature, like the back of your hand. Don't put the pressure on yourself to learn a lot of things. Learn one thing and do it really well. Because from this high probability trend trade, guys, once you understand those first two concepts, momentum and clear path, every door is open. The skies are wide. And this is what's going to take you to the next trade and the next trade. And that's what's going to make management easier. And that's what's going to make finding those other entries and recognizing patterns. So keep it simple in the beginning. We're going to talk for an hour about 3 rules. That's it, 3 rules. We're going to look at them, learn how to study them. I'm even going to give you a plan for them, guys. You got to know what the looks are. You've got to know what you're going to commit to, and you've got to learn them so that they're easy. And that's where I'm going to go back to the spreadsheet. I'm going to give you a way to study these today. Most of you are going to ignore it because it feels like work. And if you have a little shame brewing in your heart because you haven't done this, that's okay. Embrace it. These are the basic looks, guys. Strong triggers, clear path, entry. All of these are in green. Every one of these pictures is annotated to show you a picture of the rule being met, to show you exactly what it looks like when you get into this trade, to show you exactly what your advantages look like. And then there's the red sections that show you precisely what it looks like when your rules aren't met, when you should be sitting on your hands and doing nothing. I can't make you look at these. I can't make you take pictures, but if you do, you're going to be a better chart reader. There's the client trade section. Entries for the long and short high probability trend trade. Almost 400 pictures of Nexgen users who've presented in this room talking about momentum, clear path, all that good stuff. There's very simple management, ways to manage differently as you grow. And then guys, there's patterns that repeat themselves over and over. And the easier and the faster you recognize momentum and clear path, the quicker these patterns are going to jump off the page at you. So your goal is to build your plan, to start taking pictures, to start annotating charts, to fill out these sections so that these looks become easy. And it's funny to me, so day traders hate to do work, which is crazy because all of you have been successful in life. There's no doubt in my mind. But day traders hate to study. They hate to work. We're so accustomed to being alpha males. We're so accustomed to being the alpha female. We're so accustomed to being the leader instead of the student that we completely omit the things that are going to bring us success. So I'm going to tell you guys right now, and I'm going to say it one more time, and I'm going to scream it from the top of my lungs. Fill out your spreadsheet with pictures of your rule being met. And guys, post your trades in class and get feedback. I am the warmer, fuzzier Novak. I try to celebrate victories, but I don't mind pointing out problems. But I'll teach you how to fix that problem every time it's presented in the room. So before we go to rules, I'm going to give you one more thing because I know you guys are going to post in the room before I'm done with this first hour. This is how you're going to get the best feedback. I'm going to tell you right now, go back to the 3 rules every time you post in the room. Go back to momentum. Go back to whether or not you had a clear path. And please show me your entry all the way to the exit. Because I want to see what you did and where you did it. Because there's a lesson in everything, guys. And I'm also going to ask in the room as I teach these lessons, hey, this is strong triggers. Is everybody good? Guys, give me a Y or an N. And if you give me an N, it means that we get to go back and revisit that lesson, no matter what it is. So every time you post in the room, I want you to talk about the momentum that you see. I want you to talk about whether or not you had a clear path, and I want you to talk about your entries. And I want you to use the language of the rules on your charts. I want you to associate what you're looking at with exactly what it's supposed to say to you. So we're going to get going. If you have a question, interrupt me. Doesn't bother me. But we're going to talk about strong triggers for a minute. And I'm going to remind you that the large chart is going to define direction. The large chart is going to define momentum through rule number 1. And the large chart is going to define your path. Do not get caught up in the siren song of the small chart if the large chart doesn't tell you it's time to look for an entry. So we're going to let it determine trend first. This is the easiest lesson ever. If the background's green, it's going up. If it's red, it's going down. Your highest chance of success, it comes from trading up when it's up and down when it's down. Go with the flow. Easiest thing you can do. Strong triggers in an uptrend with a green background. Your little cheat code here. Both your small and your large triggers are going to have to be green as well. If the background, the large and the small triggers aren't the same color, you don't have strong triggers. It's really pretty easy. The smalls are going to be up and above the large triggers. The large triggers have to be widening. There has to be an opening there. And the smalls are above. And I want you to picture, we're going to draw some pictures today. Because I got quite a few pictures in the room yesterday where people were claiming strong triggers when in fact it wasn't. So what does strong triggers look like, guys? I want you to picture scissors. And when scissors are open, you can cut. But the thing is, scissors are only open when there's separation, when there's a gap between the blades. The same is true in a downtrend. All the colors have to be red, small and large. The small have to be below the large have to be wide, and there has to be space between the two. Your scissors have to be open. Guys, when the scissors are open, when the triggers are strong, you have a market where the odds are favorable for it to continue in the direction of the trend. Odds favorable momentum is how I like to describe strong triggers. OFM, you're going to see it on a chart. Guys, when you have odds favorable momentum, that's when you're looking to buy Fibonacci support in an uptrend. That's when you're looking to sell Fibonacci resistance in a downtrend. That big slow chart looks like it sprouts a tail or a wick. You're going to use that refinement chart when the rules are met to pinpoint exactly where that tail is most likely to form. So you're going to also use this for a study. With those strong triggers and you see a tail, you're going to circle it. It becomes a study tool, and I'll talk about how to do that more. Strong triggers push a market. Strong triggers can break key areas, and God bless them, strong triggers can cover up a lot of the mistakes that we're likely to make as new users, because momentum pushes a market, and momentum is created by the people that want the market to go that direction fast. This is strength. Is everyone good with that? It's a pretty easy look. Where is it? Boom. Holy smokes. Small's above the large. Large or wide. Guys, look at this. There's one of those pullbacks. Let's circle it. There's another one. Let's circle it. Egads and little fishes, guys. Those might have been entries. I hope to see a couple of those in the room. But what happens when the scissors close? Have you ever taken a closed pair of scissors and went to cut something? You're like, crap, I can't cut anything. The scissors aren't open. Guys, that's weakness. When your small triggers work their way back inside of the large triggers, ladies and gentlemen, this is a market where momentum is gone. You no longer have the advantage of momentum. And when you have these weak triggers, anything can happen up or down. Type it on your chart, ACH, anything can happen. And what you're going to find as you grow, as you watch, as you learn, that this will always be the best look for shorts. Odds favorable momentum is always the best look for shorts. And if you're a brand new user, I'm giving you that blanket rule where I say don't trade without momentum is your best chance of success. And those small triggers, the scissors are going to begin to close, but one line goes into the large triggers, one line stays out. Guys, in your brain, you should say to yourself, oh my gosh, momentum is slowing. I'm losing that advantage of momentum, but I'm a pretty good chart reader now because I did the study. I can still find opportunities to take short trades. And once those smalls work inside of the large, guys, this is where anything can happen. My advantage is gone. I'm relying on my other things. I'm relying on clear paths or maybe the perfect entry, and I'm managing aggressively with my chart reading because I've lost a third of what makes my trades great. And you're going to see this all day long. And when weak triggers are among you there in the crowd, what happens, well, there we go right there. There's weakness, and look how the market is pushing down. And there was weakness, and look how the market pushed up. And guys, I'm telling you, a little bit of understanding the difference between strength and weakness is going to pay huge dividends for you. So your job, we're going to use this picture a lot, is to take a picture, draw an arrow, and I'm not going to get crazy with it, but I'm going to say smalls below large, all red, space means strength, and let's just go OFM. Let's get accustomed to saying odds favorable momentum anytime we have strong triggers down. And there's another one right there. And then I'll take the exact same thing. Wow, what did I do? Holy smokes. I think I just lost my picture. That just makes me sad. I did. I completely lost the picture. Don't know how that happened. That's okay. I'm going to take the same picture and I'm going to do it for strong triggers up. And I'm going to take the same picture and I'm going to do it for weak triggers. And I'm going to remind myself verbally what it means to have or to lose the advantage, guys. So strong triggers leads the way. It's a large chart thing. It can be determined on the most current bar of the large chart. So let's do that again like we were looking at it in real life. I'm looking at the most current bar and I'm saying to myself, I'm in an uptrend. The background is green. That was easy. Do I have odds favorable momentum in the moment, guys? Work with me here. What do you think? Do we have that strong trigger look? Do we have the best of the best? Is this a look that pushes the market in the direction of the trend? Is that the look that breaks key areas? Is that the look that may cover your mistakes? Anybody? Nobody. Awesome. So let's go to rule number 2. Rule number 2, thank you, Marty. Rule number 2 says don't trade into lines. There's no reason to trade into lines. You see them before the market gets there, and you know that they can stop the market. Termination conditions must be false, which means that you're going to have room to your profit targets, which means that you're going to have a clear path, guys. And when you couple that clear path with momentum, holy crap, it's hard to make things go wrong. So on your large chart, termination conditions are Fibonacci-based indicators that may reverse the market. And we make this decision based on a comparison between the areas and those trigger lines that give you momentum. So the areas we're looking for, divergence, highs, and lows. Guys, you should memorize this list. Divergence will print if there's a loss of momentum at the pivot, whether it's from a low or from a high. That line that prints, that divergence line that prints, acts like a line in the sand. And it taunts the other side. And it says, I dare you. Red Fibonacci resistance. When the market is trending up, this is a point where the market may stop, bounce, or reverse completely. The same is true of Fibonacci support in a downtrend. This is a point where the market may stop, bounce, or reverse completely. In yellow 1-to-1s, in an uptrend, they behave as resistance. In a downtrend, they behave as support. And guys, these are the locations. These are the areas that you know about long before the market gets to, where the large crowd is going to make decisions, where the large crowd may buy, may sell, may enter, may exit, or where they may just fight with one another. The thing is, you don't have to be caught up in their decision-making process, guys. So to decide whether or not, congratulations, Andy. And it's so much easier to do 2 or 4 trades than to do them all. Guys, you have to determine whether or not that line on your large chart is behaving as a termination condition. So we're going to let price reach the area. Write this down. This is the first step. Price reaches the area. It means those dynamic Renko bars get to resistance. Those dynamic Renko bars get to support. Once price reaches the area, we're done with price. Couldn't care less about it. Doesn't mean a thing to me, guys. We're going to let the trigger lines take over. So you have to ask yourself, where are my triggers? Price has reached resistance. Where are my triggers, guys? And if they remain below resistance, resistance is a termination condition and it may reverse the market. May is in all caps. There are 0 guarantees in day trading, guys. But if price reaches resistance and the trigger lines remain below, it has been proven through tireless study to create more problems than good. So taking trades into that termination condition isn't fruitful. When price reaches and the triggers are below, there may be an untradeable bounce. It could stop the market and create a fight between buyers and sellers. It could even reverse the market completely. Guys, if it reverses the market completely, meaning this termination with no triggers through makes those large triggers go from green to red, guys, we're going to call this a strong top. And a strong top is the precursor to the highest probability trend trade you can take. The strong top is rule number 1 for the momentum trade, for the HVA trade, for the white bar trade that John Novak teaches in a little class that he did. No more long trades. And the market reverses. It goes down. The trend is down. The momentum is great. It begins to weaken and price reaches Fibonacci support. Price reaches the area and everybody in this room says, hey, where are my triggers? They're still above support. Therefore, support is a termination condition. It could stop the market, create an untradeable bounce. Hell, it could even reverse the market, turning it into a strong bottom. And a strong bottom is the precursor for the highest probability trend trades you can take. And the strong bottom is rule number 1 for the high volume area trade, for the momentum trade, for that white bar trade that John Novak teaches. Guys, if rule number 2 isn't met, no trades into the area. It's more likely to stop the market than it is to give you a winner. But areas break. I wouldn't mention that momentum breaks areas if areas didn't break. And guys, this is what it takes to break an area. Your small triggers and your large triggers must get to the other side. It has nothing to do with momentum. It has nothing to do with price bars. Until your small and large triggers get to the other side of support, support is not broken. But once they do, support begins to behave as resistance. The path is clear until you reach the next area. Smalls above, large above, resistance becomes support. The area is broken, and that area is broken until you reach the next area. So Marty, that is one line inside, and that is one line outside. And what that is a visual representation that the trend may be slowing, but then you couple it with the idea that price just reached resistance and all the triggers are below. Not only do you not have the strongest momentum ever, but you're also directly into a termination condition, and that should be a huge red flag saying, whoa, pump the brakes. Let's see if it breaks, which means that the small and large get above resistance, or let's see if it rolls and creates a strong top or bottom, and I'll look to go the other direction. So that is the perfect example of when it's time to pause. Nice picture, man. Thank you for that. Guys, there's a transition look. There's a moment when the smalls are through and the large are not, and all that momentum says that the area has the potential to break. I'm going to give you a way to capitalize and take advantage of this look. But for you brand new users, let's let it either be a termination or a clear path. Let's say focus. Let's understand the difference, and you'll be able to add more trades in based on that potential to break. Rule number 2. Most broken rule out there. And I think that if we asked everybody in the room in a private interview and said, how many of you tend to trade into termination conditions or used to trade into termination conditions, probably everybody in this room would raise their hand. Guys, I was the king of it, which is why I got pretty good at not doing it. There's going to be times when your path isn't clear because of stacked areas, and you newer users, you know this frustration. Man, I've been sitting on my hands for 2 hours and I keep hitting support. I keep hitting resistance. My triggers don't break. I can't find a clear path. This is crap. And that's typically what we think. Guys, this is 90% of your day. I promise you this. Jeffrey, this is 90% of your day. Crypto, this is 90% of your day. Gary, Joel, Ron, Jeffrey, Iron Mike, this is 90% of your day. And like Andy said, it's better to take 2 to 4 trades and do them well. Have your rules met instead of hoping things break, because man, hope is a horrible way to trade. The futures markets, I did a little research and I messed it up at first because I read that the futures markets traded $220 billion daily, and I thought, oh, that's so much money, that's crazy. And then what I realized is that the futures markets trade an average of $220 billion hourly. Trillions of dollars daily. And guys, it only takes $400 in your pocket. And man, write this down on a piece of paper. It takes $400 in your pocket to create a 6-figure income through your day trading. $400, that's it. Out of 220 billion hourly, all you have to make is 400 a day, and you're in 6 figures consistently, guys. You don't need every move. Every swing isn't your swing. Every tick isn't your tick, guys. Wait for the advantage. Wait for having the best of the best. And this is me trading in determination conditions, guys. Not really. This is rule number 2 being met 26 times the day before Thanksgiving. 26 times areas didn't break. 6 times areas broke. Your brain is going to tell you because one line broke one time, you should trade into every line, because otherwise you're never going to make any money. Guys, that's not true. And it's not the one time that it breaks that establishes your plan, that creates your rules, guys. It's the 10 times. It's the 9 out of 10 times that it doesn't break that gives you this giant red flag that you know how to see. You just have to choose to trust it. And you've got to go back and you've got to learn to respect it. And if you do that whole picture taking thing, right? Look at this. Price reached Fibonacci support. All of my triggers are above. I'm not going short into that area. Small and large didn't get above resistance. Sure enough, it cranks all the way down to support. Small and large broke support, comes right back to it as resistance and continues down. Oh my gosh. Guys, this is crude oil live as we live and breathe, and every lesson that we have talked about has happened today. Termination conditions started to push down. Let's back up. Oh my gosh, termination again. Don't go long, silly. Coming right off the fibs. Right off that fib. Everything says up. There's those darn tails again. Divergence behaving as a termination condition. Support behaving as a termination condition. Resistance, 1-to-1s. Man, all you have to do is go take some pictures, guys. Scroll back. You'll learn how to believe it. You really will. So I'm going to ask real quick. Give me a why. If you guys are feeling all right, if we're doing good things, if things are kind of working out the way they need to work, we're going to let the large chart define the direction, up or down. We're going to let it define the momentum with strong triggers. We're going to let it define termination conditions. Guys, the large chart gets a lot of work done. 66% of your advantages are met on the large chart before you ever turn your attention on a smaller, faster chart. Excited for any week unlike the last one. Amen, Marty. And that smaller, faster chart, this is where the good stuff happens, guys. This is where you're going to precisely pinpoint where that small crowd is most likely to fail. This is where you're going to pinpoint where the market is most likely to continue. And you're going to do it with such accuracy that you're going to use a limit order to buy or sell a pullback in an area inside of triggers. That's wordy, isn't it? I'm going to use a limit order. I'm literally going to wait for the market to come to me. And I'm going to have that limit order waiting in an area at a fib, a mid-band, or a yellow 1-to-1. And I want that area to be inside of triggers. And ideally, it's inside of what we call favorable large triggers. And favorable large triggers means that your large triggers and your synthetic triggers are one on top of the other. They're stacked. It looks like two snakes riding piggyback, guys. Because when they are, these large triggers define where price bars are likely to return. I want you to see this cool phenomenon that happens. Price accelerates away from the large triggers and pulls back. And it accelerates away and pulls back and accelerates away and pulls back. And it accelerates away and pulls back. And guys, large triggers, no matter what chart, define where these price bars are most likely to return. So when they're one on top of the other, your large and synthetic, what you've done is you have essentially taken the return point, the correction point, and you've put them one on top of the other into the smallest space possible. And then when you have an area inside, fibs, mid-bands, or yellow 1-to-1s, those are what create the bounce. The triggers tell you where the price bars are likely to return. The areas show you where it's likely to bounce. It's like a brick wall, and you're just chucking a tennis ball at it. You don't expect the tennis ball to bounce until it hits something solid. These areas are something solid. This is going to give you the least amount of risk. This is going to give you the highest profit potential, guys. So we're going to talk about identifying the entry, and we're going to go through it. I'm going to go from the client trade section in the spreadsheet, and we're going to go through a short trade together. And we could probably even go back, maybe find a live example of how to do this as well. But it all begins with rules being met on my large chart. Guys, when I've got momentum and a clear path, life is good. Everything is happy. This is a market that's likely to push. And you're thinking, what a great thing. But that little devil sitting on your shoulder is saying, they're going without you. You're never going to get paid. Why don't you just jump into this market? And guys, that's really not the best bet. Your best bet is wait for a reversal bar on the smaller, faster chart. Remember, there's like 30 bars on this chart inside of one on here. This reversal bar signals the beginning of the pullback. This reversal bar signifies the beginning of the fight from that small crowd. And at the time of the reversal bar, we have to kind of figure out where it's most likely to pull back to. And those are triggers. So I want you to draw a box. It can be mentally, it can be physically. From the lowest point of the triggers to the highest point of the triggers, guys. So the more they're stretched out from one another, the bigger this box becomes. And this shows you where these price bars are likely to return, but it's not your entry. Your entries come from areas inside. So once you develop that range, draw that box, you're going to look for areas. You're going to look for fibs, you're going to look for mid-bands, you're going to look for yellow 1-to-1s. Inside of favorable large triggers. And this is such an important word that I put it in all caps. Inside of favorable large triggers. And that resistance can be red Fibonacci, magenta midband, yellow 1-to-1s. And your window is from the closest resistance, the lowest point, to the furthest resistance, the highest point. And this box that I've created, I got a fib update, so there's a red fib right here. This box I created is where the market is most likely to continue down. This box is where the small crowd is most likely to fail, guys. And look at how it changed. Look at how you went from a very broad spectrum using the triggers, and you've refined it to a much smaller spectrum using the areas inside of triggers. And guys, your job, once you identify these areas, is to put a limit order below the lowest point. And say to yourself, if the small crowd can push, if we can get that retracement, if they hit my limit order, I'm going to be in a short trade. And guys, I'm in a short trade with odds favorable momentum to the downside. I'm in a short trade with no terminations, which means there's no key Fibonacci areas likely to create a bounce. And I'm there from the area, from the point where the market is most likely to continue, guys. This is the best of the best. This is your first trade, not your only trade. And this is the trade that teaches you to understand where the market is most likely to continue. And once you understand where the market is most likely to continue, you also have the ability to understand where it shouldn't go in this trade. So let's go through it. Reversal bar prints. At the time of the reversal bar, I'm going to identify my triggers. This lets me know where the market is likely to return. This is my correction point, but it's not my bounce point. My bounce point extends from the highest point of support to the lowest point of support inside of favorable large triggers. This blue box, guys, this is my window of opportunity. And this window of opportunity signifies where the market is most likely to continue with the trend, where the small crowd is most likely to fail. And because I can pinpoint this area where the market is most likely to continue, I understand that any line beyond those triggers, below those triggers, guys, this is where the market shouldn't go. My advantage is gone at this point. My edge is no longer with me. So this actually, 4 to 5 ticks below those triggers, becomes your first stop placement. This is where you're going to put that protective stop, and you're going to say in kind of a cocky voice, if they want my money, they're going to have to come get me. They're going to have to blow through the areas to create a bounce. They're going to have to get to the other side of those triggers where I expect price bars to return. And guys, this is the only place I'm willing to exit that trade. I'm not looking for entries. This is when my advantage is gone. And that's what pinpointing this area inside of favorable large triggers does for you. You wait for the reversal bar. You find your triggers. You find your lines, and you put an order just below it. And guys, anything on the wrong side of these triggers, 4 to 5 ticks, don't want to be there. This is where my advantage is gone. This is where my edge is no longer present. And you're going to see fibs, and you're going to see stuff up here, and you're going to say, well, if I just put my entry up here, well, then maybe I won't get run over a little bit. And if I just put my entry up here, maybe I can make my risk smaller. But guys, the areas inside of triggers are where I expect the bounce. Don't stumble over a couple pennies trying to save a couple dollars. Are there any questions about the entry? Because it starts with momentum. And then from momentum, we get the clear path. And from the clear path, we get really precise and pinpoint, guys. And there's 3 entries that you guys are likely to take. Not going to lie to you. I've seen this 1,000 times. I've done it myself. So much so, I'm going to give you this picture. Print it out. Put it on your desktop. Remind yourself to wait for the best of the best. The first one up here, pretty common. This is the, pardon my French, everybody. This is the, oh shit, it's going without me trade. So I'm just going to jump in and hope that momentum never decreases. Hope that small crowd never fights, and maybe it'll carry me to the next area. Guys, if you get in all the way up here and you're putting your stop where the market shouldn't go, you have a huge amount of risk. But the sad part is that you've got the tiniest little step to get to your problem area. So you've increased risk and you've reduced your profit potential. If you find yourself taking this jump in trade, this oh my gosh, it's going without me trade, this reversal bar signifies the loss of momentum. You're not trading that momentum anymore. That's a good exit. The second entry is when you get faked out, guys. You get juked. You're waiting for your entry. You've got it pinpointed. Your limit order's in place. And then that small crowd, that insignificant chart that's just a tiny little refinement chart starts to go up. And your stomach twists and jumps. And you go, oh my gosh, they're going without me. And you jump in. And I see these entries right at the top. And then the small crowd goes, just kidding. Let's go to the area inside of favorable large triggers. All you've done, once again, is increased your risk. All you've done is reduced your profit potential. These are very common, and you're probably going to take them. Post them in the room so that we can talk about how when you wait for the area inside of favorable large triggers, you'll have the absolute least amount of risk. And when you wait for areas inside of favorable large triggers, you'll have the absolute most profit potential. And when you wait for areas inside of favorable large triggers, more often than not, you're going to get a reversal bar in the direction of your trade. And that's going to be your next stop movement. That's going to say, hey, we're doing everything you wanted us to do. Reduce your risk, a tick or two below that reversal bar. And if the small crowd comes back for you, who cares? Tiny little risk. And you've got the most room to your profit target. So guys, that's your entry. The look is the same for the high probability trend trade. It is strong triggers, it's clear path, it's pull back to an area inside of favorable large triggers. We talked about those tails. We don't trade these tails, guys. By the time you know there's a tail, the market's all the way up here. But if you take the pullback to areas inside of favorable large triggers, very often it lines up with the bottom of that tail. So we can use this as a study tool. And let's just go back and look at it in the real market. There's a couple of those circles. If you guys would do me the favor of saying, you know what, Mark, I do see the momentum, and I absolutely see that the path is clear, and I know that you circled those for a reason. This is 2 entries, guys. There's the top of the triggers to the bottom of the triggers. This is where price bars are most likely to return. From the highest point of support to the lowest point of support is where it's most likely to bounce. My stop goes down here until I get a reversal bar, and it's an easy winner. And then it does it again. We'll take the same one from the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support. My stop goes down here until I get a reversal bar. Then once I get that reversal bar, off we go. And guys, this is your pattern. So you've got to study this. You've got to learn this look. You've got to get to a point to where it's actually pretty easy for you. And that's where the spreadsheet comes in, guys. That's where taking pictures over and over is going to pay dividends. And I'll pull up market flow too, just for grins. So this is where I give you everything that you need. And it's going to start with Chart Reading 101. In order to get to where you want to be, you have to be able to recognize some looks and patterns quickly. And there's no reason to be able to recognize them quickly in the beginning. You're brand new. So this is going to eradicate the new quicker than if you try to learn to be a chart reader through nothing but taking trades. Take pictures, guys. Take a lot of pictures. But Mark, that feels like work. Who cares? Take pictures. But Mark, I don't want to annotate charts. Who cares? Take pictures. Annotate your charts. Guys, you have to make the decision. Do you want this or do you not? Right? Do you want to be great at this or do you want to struggle at this? I'm giving you the golden goose. Don't turn it into fried chicken. Pop it in there, Jeffrey. Take 25 pictures of strong triggers, guys. And when you take those 25 pictures, fill up your spreadsheet. Commit them to memory. And then take 25 pictures of weak triggers and commit that to memory and never confuse the two. And then take pictures of your clear path. Take pictures of your terminations. Take pictures of your entries. Guys, burn these looks into your mind. But don't just take pictures. Annotate the chart. Talk about why it's strong, why it's a termination, why this is your entry. Where does your entry go, guys? And what you're going to do is the time that you take typing on that chart while you're looking at the actual picture, it creates a correlation, and these looks begin to have value and meaning, and they create confidence. And you'll ultimately piece the 3 together to create a trade, because the recipe for a trade hasn't changed. It's momentum, it's clear path in an entry area, and once you have the 3, we're good. So what do you see in real time as entries are developing? So Jeffrey, thank you for saying that. So what happens is, here, let me do this. There's so many in here. I want to find the perfect entry, Jeffrey. 323. Let me find the picture perfect, and I'll show you exactly what it looks like real time. 905. All right, you ready? See how the large chart has odds favorable momentum and a clear path? See how your small chart, everything is up? And you can see those triggers and you can see those areas, right? Let me stretch this out a little bit. Jeffrey, this is exactly what it's going to look like real time. Make your decision. Take your entry. Move your stop. Get stopped out. That's what it's going to look like. And it's going to be sometimes that fast. From your reversal bar, though, to your entry was almost 5 minutes, Jeffrey. It was almost 5 minutes. So what happens is in the beginning, it feels like it's absolutely flying, doesn't it? It feels like it's moving so fast. And how do you slow that down? You slow it down by knowing exactly what it looks like and exactly where your entries come from. And then, Jeffrey, what happens is in a live scenario, and that's not a trade. Let's go to a different market. Whoops. Let me pull up my big chart. So when the market is live, you almost begin to anticipate. So let's pretend that the path is clear, that things are good, that stuff is down. Before you ever get a reversal bar, Jeffrey, you're going to start saying, oh, there's my triggers, and holy crap, there's my area inside. And even before that reversal bar, if I get a reversal bar, I know exactly where it's most likely to continue down. And you'll literally, it's like leading the passer. Does that make sense? So in real time, as it's developing, it's either going to be really fast if there's a lot of volume, or it's going to be a little slow if the volume isn't quite as tight. But this is why you start here. You start on the large chart and you burn these in. And what you'll find is that your chart read will typically take, to decide if you have a trade, Jeffrey, between 8 to 10 seconds. 8 to 10 seconds to know that your rules are met once you have these looks committed to memory. And what you'll also find is that if you're 25 to 30 seconds into your decision-making process, you're probably breaking your rules. You're probably making stuff up. You're probably using the word but. Well, I don't have odds favorable momentum or a clear path, but I do have an area inside of favorable large triggers. I'll take that short. Does that make sense? Does that help a little bit? And when we get to the second half of class, if we're ever looking at a live market, Jeffrey, and something sets up, man, I'll take that trade every time. We'll take it live together on Simulator. We'll talk about what we did, why we did it, where we did it, what it means to us. But notice here, gold's in a strong trending market. Everything says up, but I don't have odds favorable momentum for the most part. But in this strong trending market, I can assume that it's there, and I have a clear path. And if I took the entry, I got wiped out. And some people will just buy a mid-band or wait for confirmation of the mid-band. But that's how quick that your chart reads are going to happen. And it happens quicker, Jeffrey, if you go through this process, because it should take you maybe a second or two to understand whether or not your rules are met on the large chart. And pinpointing your entries takes a little longer, but you're buying yourself that time by getting good at these, by getting good at strong triggers and a clear path. You're setting yourself up for long-term success by insisting on these two. And then your small chart's just an entry chart. There's so many entries to be had. Not all of them are high probability trend trades. Some of them are momentum trades. Some of them are HVA trades. Some of them are just jumping the hell in because there's nothing in the way trades. But it all comes from that basic foundation, that understanding that momentum and path leads the way, and then getting so good at it that your reads happen quickly. One of the ways you can do that is, I'm going to give you this as well. This is the high probability trend trade checklist page. And what this does for you is it gives you pictures of what it means to have a strong top or bottom. And that becomes important because that strong top or bottom is the precursor for the best of the best. That strong top or bottom sets you up for a high volume area momentum style trade. That strong top or bottom gives you the best of the best when you're looking for those trend trades. So make sure that you go through and make sure that you understand the recipe. And I'm talking to everybody, not just Jeffrey. Understand that when a termination reverses the market, it sets you up for some goodness. And then be able to identify momentum, strong triggers. It's the same no matter what chart, guys. I don't care if it's a big chart, little chart, range chart, day chart, stock chart. Who cares? Momentum is momentum is momentum. Learn this look. Commit it to memory. Insist on it. Avoid that silly little anything can happen stuff. When it comes to defining areas, if price reaches a line and your triggers are below resistance, sit on your hands. You don't have a clear path. If both your small and large got above the area and you haven't hit anything, you have a clear path. Look for your rules to be met. And then on the tail end of the plan I'm about to give you is a way to capitalize on this potential to break look. And this is what we call a 50-50 look. 50% are through, 50% are not. And guys, it takes momentum to be willing to take this trade. And it takes absolutely no loss of momentum on any chart for me to commit to this entry. So there's a different set of rules to get you into that trade. And then finally, pinpointing where the market is most likely to continue. Guys, this is universal for the trend trade, whether it's a high probability or whether it's one of those 50-50 trades. It's always the area inside a favorable large trigger, somewhere inside of that correction zone. Good morning, Miss M. Your stop always needs to go to the other side of the trigger. So commit these to memory. And then if you really want to keep it simple, guys, print out this checklist and put it on your desktop. This is the high probability trend trade checklist. There's 4 items. That's it. The first one isn't even mandatory, but it's that strong top or bottom that gives us warm fuzzies. Nobody in the history of this checklist has ever done worse than 70% when they answer yes truthfully. And guys, I've had engineers run it through the ringer. I mean, run it through the ringer. And they came up around 83, 84%. I say 70 to 80 in this classroom. I'd rather project low, be willing to take losses. But you've got to understand each of the parts so that you can create the whole. And guys, this is the language I love to see you use on your charts when you're annotating, talking about momentum, talking about terminations. And this one is probably the most important. Writing that word inside of triggers. Nope, everything's on the large chart. Jeffrey, momentum and path is always the large chart. Momentum and path is always the large chart. So when I'm looking at this is my run through right now, and this is pretty cool. This is live gold. The first thing I do is I say I'm in a downtrend. This is just the large chart, not even looking at a small chart. Do you see it? Red background? Pretty easy, right? And now my smalls are below the large are wide, the spaces between. I have odds favorable momentum. Are you with me so far? We're already a third of the way through our rules. But here's the challenge, and this was the 10 a.m. fib update, and it's kind of hard to see. But I just got a Fibonacci area that updated here. And I got a Fibonacci area that just updated. They update every 2 hours right there. So what I don't have right now, Jeffrey, is a clear path. Whoops, well, there we go. Now I have the potential to break, and I haven't reached the next area. So this is the 50-50 look. Perfect. Small triggers are through, large triggers are not. Does that make sense? So once I have this look, and I say, oh my gosh, this has the potential to break, where are my triggers? There's the bottom, there's the top, and the only line inside of that thing is a mid-band. So if I don't hit this blue line, I'm going to try and take a short trade right here, right at that mid-band, right inside of those triggers. Are you with me? Just entry. Oh man, look at that. Son of a gun. Well, now I don't have a clear path. I'm going to cancel out. 90% of my day is doing nothing. But Jeffrey, that was a perfect real-world example. And when this is not from a key Fibonacci area, that mid-band area, fibs around it, are a little more likely to hold. So we're going to go into a little bit of a holding pattern here. Did that make sense? That was pretty much the whole read start to finish. Large chart says down. My triggers aren't wide. I don't really have odds favorable momentum. And Jeffrey, I don't have any triggers through Fibonacci support. No clear path. Not my best momentum look. No short trades. Small's above the large, large are wide, momentum is good, but what do we notice at 69.25? I have one of those darn Fibonacci areas, and all of my triggers are below, not a clear path. And Jeffrey, this is how quickly your chart reads happen. You're going to say momentum is good, the path isn't clear, who cares what's going on to the right? I don't need this chart. Not right now, not until this says I have a fighting chance. And the problem is, Jeffrey, is it means that you have to be patient. It means that you have to wait for it all to come together instead of just some of it to come together. Does that help? That's everybody's issue, Rob. Awesome. And Jeffrey, the cool thing is I'm going to remind you of these things every day. And it's going to take you to the KISS plan. And I'm going to give you guys this as well. I mean, you literally get everything. Everything that I could ever give you here. Open up KISS plan. There we go. So we've talked about the momentum. And we've talked about the path. And we've talked about the entries. Guys, this KISS plan gives you something concrete. This is your trading plan, brand new users. This is your Bible, your gospel, your Quran. Whatever it is that you find holy, this is it. And guys, this is a stepping stone in your learning journey. This is your first trade, not your only trade. This is your foundation. This is what teaches you to read your indicators. And it's designed to optimize your chances of success with the high probability trend trade as a new user. What does that mean? That means this is the best way to take the high probability trend trade. It doesn't mean it's the only way, but it means it's the best way as taught in class. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. When you can read your charts, you're going to see more opportunities. And Ron, nickel in the mail, the high probability trend trade is not your get-rich trade. Your high probability trend trade is what teaches you to see your get-rich trade, that teaches you to see the opportunities outside of the very basics. And your simple plan for consistency. Don't fight the large chart. It saved you, Andy. It takes a while to get on board with your best looks versus your feelings. It sure does. Thank you for putting that in there. So you guys that think you're alone in that, you're not. Everybody goes through it. The difference between trading what you see and trading your rules being met are two terribly different things. Guys, financial suicide is created by fighting strong triggers, having to be first, going against that large crowd, and trading into termination conditions. Guys, I was the king of financial suicide for like the first year as a day trader. I traded into every area hoping it would break. So if you can avoid those two things in the beginning, if you learn how to never fight the large chart, I would say, and this is just a made-up percentage, that you're probably better off than 70 to 80% of the average day traders. Because it means that you're letting the large chart lead the way, that you're letting the big crowd do the work. And then you just have to define your entry. We have spent nearly an hour talking about getting into the market where the market is most likely to continue. Guys, we have broken down each rule individually. I've given you pictures. I've taught you how to study it. I've given you anything and everything that you need to be able to pinpoint with amazing precision where the market is most likely to continue. And then once you get in at that point, guess what? That's where shit gets scary. Pardon my French again, guys. I don't know what's gotten into me today. That's when you have to manage it. That's when things pucker. That's when stuff gets scary because now you have something to lose, but it doesn't have to be scary. And it doesn't have to be emotional. It doesn't have to be frightening. The truth is that if you allow your management to be every bit as mechanical as your entry, it helps eliminate fear and emotion, guys. And your management turns into this series of if-then. And the biggest one and the most important one is that your management plan from the KISS plan is designed, if I get into the market where the market is most likely to continue, then my stop goes 4 to 5 ticks below those triggers where the market shouldn't go. It popped right on a fib, Marty. That 10 a.m. fib update gets you. So your management plan is dependent on your ability to design and get that entry, guys. And your first stop placement is right there. Your ATM strategies, ladies and gentlemen, for crude oil for the S&P, your initial stop is at 12 ticks. 12 ticks isn't your stop. 12 ticks gives you time to react, to put your stop where it should go. Very often, I see people get in maybe at 67. And then 12 ticks is right above support inside of favorable large triggers, and they leave it there. And they're like, well, my stop is 12 ticks. No, your stop is where the market should not go. It may be 7 ticks. It might be 15 ticks. You never know. Just depends on the trade. But right here, you've got two options. You're either going to get stopped out, and I'm going to say it again, it's a normal part of a positive equity curve, or you're going to get that reversal bar in the direction of your trade. And if, big capital if, the reversal bar prints, then your new stop is 2 ticks below that reversal bar. Or if you're in a short trade, it's 2 ticks above. And that's it, guys. You have to sit on your hands till the reversal bar. And it's either going to happen or it's not. But once you get the reversal bar with your awesome entry, guys, risk is low. And you're darn near to your first target. Your first target in the KISS plan is designed to get you accustomed to getting paid. And it's only $100 away from your entry. Which means that if I was in at 66.50, guys, my first contract's off at 68.50. I'm only on the second bar. And there's $100 in my account. And I feel good, and my palms aren't so sweaty. And my hair stopped falling out, and that pleat in my chair starts to relax. And I'm going break even, so I have nothing to lose. I've been paid, I have nothing to lose, and guys, it maybe isn't your best stop, but look at this. You'll craft a plan tailored to your personal goals based on your experience reading the indicators. This break-even stop is your reminder that the only reason you took this trade in the first place is because of odds favorable momentum and a clear path, and the expectation for a trend trade when those rules are met is to find the next area. So you're going to go break even. You're going to have absolutely nothing to lose. Where is that picture? And it's either going to go to your second target or it's going to get you for break even, which doesn't hurt a whole lot when that happens. And guys, your second target in the KISS plan is only $200 away from your great entry, which means that in one trade with 3 advantages taken from only 2 charts, you just made $300 probably in 3 to 4 minutes maybe. And I want to remind you that trading isn't about making all the money. It's about making the best money, the easiest money, the highest probability money, the most consistent money. And that $300 trade, if that's the best you do every day for those 252 trading days in a year, that's a $75,000 a year. 75 grand from one high probability trend trade that goes the distance. Throw in a break-even trade and you're in 6 figures. Guys, this is low expectations once you learn to read your indicators. There's no doubt in my mind that you will see the potential to do $5, $6, $7, $8, $9, $1,000 a day pretty easy from following the plan. So you don't have to make all the money. Make the best money. Make the easiest money. And I promised you everything that you would need to be successful, guys. And I'm going to do that right now. I'm actually going to give you a zip file. And the zip file is very cleverly named everything you need, guys. And inside of that zip file is Chart Reading 101. Inside of that zip file is daily goals, exit conditions, high probability trend trade checklist. There's the KISS plan. There's the PDF that I use, or the PowerPoint that I use to teach, guys. There are PDF and Word documents of both, of each, so that you can open it no matter what. And what I'm really doing is I'm removing excuses on why you're not getting to where you want to be. And I'm putting the ball in your court because I promised you everything that you need to be successful. So let's go through what you now possess, guys. You have rules for a trade that has been proven to win more than it loses. You have the ability to study it. You know how to study it. You've been shown how to study it. You've been given a place to put all of your study pictures, to capitalize on that repetition through recognition. I'll drop that in there again just in case I didn't do it this morning. You have example trades, you have entry sequences, you have management. Guys, you have a written plan that's designed to optimize your chances of success. The only thing The only thing that you don't have is experience. I can't give that to you. I can't give you the experience. So if the market feels like it's moving fast, guys, the pictures you take are going to slow it down. If you don't feel like you're finding the right entry, the feedback you get in class is going to help you get there. It's going to help you get there with anything and everything that you need. So we learned the rules. Post your pictures, use your spreadsheet, get that repetition. And guys, give yourself a little grace. You're new. You're brand new. You've never done this before. You shouldn't be an expert at it. There's no reason for you to believe that you should be an expert at it. But I'm going to share one more thing, and then I'm going to take a break. And the key to all of this, let's make that a little smaller. The key to all of, ooh, I just inverted it. That's wrong. Whoa, there we go. How cool is that? Have a foundation, guys. Build a foundation. Build a foundation from a high probability trend trade. Learn to read your indicators and understand the basics. And then each week, grow a little bit, compound a little bit. Every day, get a little bit better. And that's this is my new favorite word. I might have to get a tattoo of it, Kaizen. And I don't know if that's how you say it, but that's how it looks. And guys, it means focusing on small improvements every day and not waiting for big improvements, but trying to become 1% better every day. You're not going to see your 1%, but I promise you, if you post in the room, I'm going to see it. And I'm going to celebrate it because I love to celebrate you guys. Instead of setting a big goal, I want to be a day trader. Set a small goal. I want to get really good at identifying momentum. And then once that goal is reached, well, now I want to get really good at termination conditions. And then when I reach that goal, now I want to put in that entry. And now I want to piece them together. And now I want to learn how to manage it. Now I want to look for another trade. Guys, tackle them one by one. So for you brand new users, I blanket you with very conservative rules. And it's aggravating. I know it is. We talk about recognition of advantages. I give you a solid plan that optimizes your chances of success as you learn to read your indicators. And it feels very constricting and very binding. And Mark, I know there's so many more other opportunities in the market. Why won't you just set me free? I'm not in control of you. But what I've done is I've told you that no momentum is bad, that areas beyond the triggers are bad, that termination conditions are bad. And I do this because it increases the likelihood of your success. And the memory of that success is what's going to create your confidence, guys. And that's what's important. Be confident. Trust your plan. These things aren't always bad. But until you have the experience to know when to use exceptions, it's safer that way. You have a better chance of winning. You have a better chance of sticking around. Taking this to the end zone, guys. And you've got to learn the process that yields the results. That's understanding momentum and path and finding your entries. That's the process. The process has been proven to win more than it loses. This is where the KISS plan comes in. And if you keep it that basic, guys, if you follow simple rules, if you're okay not keeping up with the Joneses, you can find an extraordinary level of success. I've had people get funded in those prop firms through that very basic KISS plan. And I've watched it over the years. The people that keep it the most simple are the people that typically get to where they want to be the fastest. The people that post the most typically get to where they want to be the fastest. The people that ask the most questions typically get to where they want to be the fastest. And the further you deviate from simple, the longer it takes to get to where it is you want to be. Trust me, been there, done that, seen it. So the last one, I love this, guys. Keep questioning everything. If it doesn't make sense, force me to address it. I don't mind. If you think my read is wrong, tell me what your read is, and we'll compare notes based on the rules. It's okay. It doesn't bother me. I enjoy it. I like the free thinkers. I want you to learn, guys, and I want you to be easy on yourself as you go through this learning process, because it feels like drinking from a fire hose the first couple days, and it begins to get easier as you go, but you're new. It's okay to be. And then there's one more thing, and I didn't put this in there, and I should have, and I didn't say it. I'm sorry. One more thing I want to share with you, and then I'm going to go take a break. Guys, there's two things you have to know when you're getting into a trade, especially when you go live. And in the beginning, you're not going to know this because you're learning it, but you want to know why you're going to enter, And you're going to want to know why you're going to exit, guys. And this is a written plan. And someone posted in the room earlier that they put their stop too tight. And I don't know why you put your stop too tight. And we'll talk about it when we look at your picture. But your entry rules are based on patterns that have been proven to win more than they lose. Proven. You've back tested. You've verified. You've studied. You've seen it. And guys, if it wins 80% of the time, take it every time. Be willing to take a loser. But you also have to know why you're going to exit your trade. And this is where most of us fall short in the beginning, because we leave our management to emotion. We let numbers on a chart dictate our management. Well, I have a $200 target. And you completely ignore that there's 17 fibs between you and that target. And your entry conditions are just you identifying when your edge is gone, or your exit conditions, excuse me. So that initial stop is where your edge is gone. Those key Fibonacci areas on a large chart is where your edge is gone. So rules eliminate the need to know what's going to happen. You'll never know what's going to happen. You have to learn to believe that. And once you start trading rules, it doesn't matter what happens next, guys, because if your rules have been proven to win more than they lose, why would you ever skip a trade when the rules are met, right? Why would you ever manage out of that trade early when you understand the expectations? So every trade has a different set of entry rules. Every trade has a different set of exit rules. This is why I say learn one. Get good at it. Keep it mechanical. Like, that's your whole plan for a week or two. I mean, that's the entire plan for a week or two. And then you're going to start finding other exit conditions, and then you're going to add another trade, and that's a different set of rules, and that has different management, and so on and so forth. So simplicity pays dividends in the beginning, guys. Embrace the simplicity. And then as we get into this next hour and I start looking at your charts, I'm going to remind you that I don't grade you on your ability to take great trades. I don't shame you if you broke a rule. We'll talk about how to avoid breaking it. But every chart in this room, whether you are a trend trader, a momentum trader, a jump the fudge in trader, whether you are an HVA trader, whether you're using trades from that AL class, because I know I have some of you in here, guys, I'm going to go back to momentum, path, and entry on every one of them. And if there is a discrepancy in your read on momentum, path, or entry, we're going to address it. We're going to talk about it. We're going to talk about how to correct it. If you enter early, if you exit late, if you enter late, we're going to talk about all those things so that you can take that picture and you can go back and you can drop it into your spreadsheet and you can study that feedback tomorrow to try to have a better today. So I'm going to go take a break, guys. S&P has odds favorable momentum. We just need to get those small triggers above that darn pink line so that we have the potential to break. Gold has absolutely no momentum because the smalls are above. Everything is red, although the background is green. That's not my best look. And then crude oil is coming off of support, but the triggers are down, and dag nabbit, I just have to sit still for a minute. So I'm going to go back. You guys can watch S&P. It seems to have the most giddy up happening. I'll see you in 5 minutes. Man, stretch your legs. Ron, dude, I'm the worst at leaving. I know that I am. One day I'll get better at it. I'll see you guys in 5. I'm on break. It's going to be quiet for a minute. Work. Look at that big fat fib. So Ron's giving lessons here. I like it. Before we go to charts, let me share the lesson that Ron's doing. This one's for you, Marty. This one's called What Are the Fibs? And what you get on each chart is there's 3 different time frames of Fibonacci that shows up on your large chart. The skinny lines that come from the 5-1 chart, these won't extend all the way to your price. And if you slide your chart back, good morning, Miss Cindy, you'll notice that it stops printing. The big fat ones are from the 21-3, and then the ones that extend all the way through, those are native to the large chart. Guys, one is not more important than the other. A line is a line is a line is a line. Don't rank them. One thing that you will notice, though, and I want to point this out, and then we'll get to looking at y'all's charts, is when you're looking at the large chart for your clear path, your synthetic fibs, the ones from higher and lower time frames, they don't print. No, dude, Ron, always infringe. They don't print above the most current bar. And this came up because I had a gentleman in this room. It's like, dude, Mark, I've got a clear path. But you don't. It just won't print until... And then the same is true on the 1-to-1s and the same is true on the mid band. So don't mistake a gap that's 1 bar wide as a clear path, just so that you guys know. That's a good lesson, though, understanding where the fibs come from. So now we're going to start looking at charts, guys. And when I do that, I scroll up to the top of the room. And I have to... Let me pull this back over. And I go from the top to the bottom, and I go back and forth and try and catch your comments. So if I miss a trade, guys, if I miss a question typed in the room, just go, hey, Mark, you missed me at 8:58. Pete's like, Mark, you missed me at 8:58. And I'm like, dude, Pete, so sorry. Let's go back and look at your chart. I do these in the order they're received. So just a little base hit to start the day. Market reverse out of nowhere. Triggers rolled up and separated. Odds favorable momentum 50-50. And guys, one thing that I can't do is let Pete type in that this is one of those 50-50 trades. Because what this actually is directly into a termination condition. So this is where I ask my new users, does everybody see that it is in fact odds favorable momentum? Do you see that price reached Fibonacci resistance? The triggers haven't broken. Rule number 1 is met, but rule number 2 is not. And remember, everybody's in a different place. You can't... Pete makes up his own rules. And Pete's rules say, even if I'm trading directly into a termination condition, well, I'm 50-50 on this fib. And Pete, it was the same thing here, and it lost drastically, right? So, guys, this is a termination condition, and your path is only clear until you reach the next area. Pete's been around a little longer. Pete has different ideas. And Pete says, with this much momentum, even though he's directly into a fib, he doesn't have momentum, everything is strung up, and he takes an entry, and it works out for him, and he's able to get right back to Fibonacci resistance, guys. And this is where momentum pays dividends. And Pete... It's a great Pete trade. It's directly into a termination condition. That's okay. It's Pete's trade. It's not your trade. Pete knew exactly what he was doing. He knew exactly where he was doing it from. He knew exactly where he wanted his stop to be. And Pete said it right there. Big momentum. Big momentum, guys. It helps. It really does. This is one of the reasons that rule number 1 is rule number 1 for a reason. Nice trade, Pete. And guys, I will say things when you post in the room and justify them. I'll say, hey, Pete, remember that week where you kept losing with this exact same look? I just want you to be aware of that. Do whatever you want to do. But I want you to remember that that is what cost you pretty big that week when you started forming opinions into areas. And it's not me trying to alter Pete's plan. It's me reminding Pete that he took a lot of losers with this look. It's a trend trade, Marty. It doesn't fit the rules for the high probability trend trade because it's directly into a termination. But yes, that's a trend trade. Now we have a true 50-50. Now we have the smalls above and the large below. Now we have a true 50-50. These areas have the potential to break because of the trigger location, because of the momentum. And Pete says 50-50, two rules broken, divergence on a 50-50, mid-band between the large triggers. It's funny to me, this is what cracks me up about just the day trading mentality, is here the mid-band was in between the triggers and it was into a termination and there was no mention of any of it. And here the mid-band's in between triggers and you have the potential to break, and that one maybe was deemed a little risky, but this is a beautiful trade. And Pete takes it from the right spot. And guys, that's what's important. Getting in at the right spot makes for easier trades. But because both of these were above the other correction point, he didn't know which one it was going to go. And this one makes it pretty easy, right? One bounce point right above the second stop goes down here until the reversal bar, and off it goes. Pete might, I don't know, Irish MKC. So, Marty, the difference between the trade that you take and the trade that Pete's taking. And guys, just for the record, Irish takes the chili dog trade, that jump in trade. You have predetermined stops, and it's a definitive number, not a location. On the trend trade, your stop goes where the market shouldn't. On a trade that's based solely in momentum, your stop is there. And yeah, stops and targets disappear when the trade is over. Cool. Good stuff, man. Keep sounding off. Keep sounding off. Every question is a good question. But this opens the door for a good little lesson here. And I'm going to go to manage it in the picture. So, trend trade expectations. The trend trade expectations are using momentum and path to get to the next area. And man, if you look at what Pete did, he used momentum and path to get to the next area. Pete understands the expectations of a trend trade. The other one is that trade that you guys are taking where you just kind of jump in based on momentum, making sure you're on the right side of things. And this one has a different expectation. These momentum, these jump-in trades, guys, your expectation has to be that I'll hold that trade until my advantage is gone. And that advantage is a loss of momentum. So these have different stops. These have tighter stops. These have different scenarios on just how long you're willing to hold the trade. So understand that different trades have different expectations, and you have to know the expectation for your trade. And once again, Pete says it, big momentum. Guys, it doesn't take a whole lot of trading to really learn to trust momentum. And momentum is pretty outstanding when it comes to advantages. All right, Andy Man. Weak top, anything can happen triggers. Divergence. You got a second lower divergence, so you sold. And did you go long? It says that you sold at the mid band. 27036. Okay. And I don't see it going down to your targets, but I guess it did. I guess there's a line in there somewhere. And then Andy, this strong bottom, it's done. You're miles away from that strong bottom. It means absolutely nothing at that point. So you took what is essentially kind of a momentum trade. But Andy, there's one key piece of the puzzle missing here. And that is Fibonacci resistance at your top. You're not coming from a strong top or bottom. You're not coming from a Fibonacci area. And because you're not, that's when you see bad things happen. So you nailed it if there was a fib there, but there wasn't. And that's why you're seeing that continuation up all the way back to those large triggers. Does that make sense? Nope. Terminations happen on the large chart. So this second lower divergence, Andy, let me show you an expectation for it. This divergence right here is likely to take out that pivot right there. And it did that. It did exactly that. But I'm not coming from anywhere. This is kind of the middle of nowhere. So you got in right after that expectation was filled, and sure enough, it started heading back up. Does that make sense? So guys, when I said in the beginning that the expectations or the rules for those momentum trades, and Andy, you took the perfect momentum trade spot, but the rules predicate you have to have that key Fibonacci area creating the reversal. And then this trade looks pretty awesome. But because it wasn't there, there's no decisions were made. That was just the sellers testing the waters in the middle of nowhere because they're sick of the buyers being in control. Does that make sense, Andy? Awesome. And then there was a beautiful trend trade. And there was a beautiful trend trade. Those are the easy ones. And Andy, you've got a little bit of an arousal going for going counter trend. Just a little bit. That's not the easy one. Your easy trades come when you're trading with everything and not fighting stuff. Good stuff, man. Great trading. I don't worry about you, Andy. All right, we got another one. Let's see what we have. These were better. I wasn't present. I agree. And then you take the momentum trade. And then, Andy, this is what I'm talking about when you're taking those momentum trades. Everything is up. It has the potential to break. You let it break the key Fibonacci area and snap back to it. Guys, this is a Nexgen momentum trade. And, Andy, you absolutely nailed it, and you ran it right up to fibs. I love that trade. You did that one beautifully. Guys, recognize this. Trading into areas is a sack full of suck. Trading from areas sure does make things easier. So that's for you new people. Trading into the areas, hoping it breaks, is a recipe for heartache. Trading from the area makes it so much easier. Andy, great job on that one, man. Let's see who gets to be next. Dun, 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 dun. Gary got us here. Termination. Things start to roll. White bar off of the termination. That's his confirmation. And man, I love this, guys. This is one of the ways you can use that market flow. But watch how it starts. It starts with a no triggers through termination condition on the large chart. Small chart triggers roll right off of it. And guys, there's that white bar off of the termination. Fast triggers roll. And Gary says, man, you couldn't pay me not to take this trade. There's an awesome video on this trade. This is where you start to incorporate market flow. And Gary, you crushed it. Absolutely crushed it. Nice job. And it starts with having that key Fibonacci area on the large chart, guys. You're going to find that the best stuff tends to come from fibs. Weak bottom because the triggers got through. All sorts of momentum. And then Andy once again nailing that momentum trade. Dude, look at this. Does everybody see it? These small triggers are rock star fast. He's got odds favorable momentum. The smalls break through, pull right back to support. That's his entry. And it's a momentum trade, so he's not holding it for a ton of money. He's getting there quick. Nice job, guys. Are they high probability trend trades? Not yet. Not yet. I bet we see one before it's all over. All right. Ron says ride the gap. Let's talk about what Ron's talking about here, guys. Ron says, Mark, we need a lesson on gap theory. So there's this cool thing that happens. When price reaches Fibonacci support, when price reaches Fibonacci resistance, when price reaches a mid band, and the large triggers remain a full bar away. And how does Ron know that they're a full bar away? On your large chart, this white line, it's gold on some of your charts depending on your settings. That bar shows you exactly where this bar turns into an up bar. And if the large triggers are on the other side of it, then what we call the gap theory is in play. And what Ron says is from Fibonacci support, with the large triggers a full bar away, I'm going to take a shot to close the gap to those triggers. And Ron, that's a little aggressive right there. I like waiting for a little confirmation, get to the other side of those small triggers first. Little aggressive, but nice trade, Ron. Understanding the chart read that sets up the trade. And guys, if you go to the client trades, you'll see that gap theory in here a lot. There's a lot of pictures of the gap theory for you to get better at. And Ron, just perfect execution there. All right, Jen, not Jim, Jen says, let's see what happens. Everything says up, strong trending market, back of the bar clears trouble, back of the price clears trouble, get in, make money. Beautiful, Jen. Nice job. One of the things on this trade, good morning, Morgan. So, Jeffrey, it happens a bit, but it's never a guarantee. But check it out. Price reaches Fibonacci support. That's the perfect picture of it. Closes the gap to the large. Price accelerates away. Closes the gap to the large. And that look isn't necessarily a trade in the beginning. There's another one. Reaches resistance. Large triggers a full bar away. It's not necessarily a trade in the beginning, Jeffrey. What it is it says, hey, no long trades yet. Let's see what happens when they close the gap. Where'd that other one go? It says, let's not go long yet, even though this looks like it was a pretty good bottom. Let's close the gap. So in the beginning, it's a patience piece. It says, all right, I'm seeing downtrend, I'm seeing momentum. Maybe I want to take a shot into this termination condition. Maybe you want to break a rule. But the gap theory says, dude, just sit tight, hold on. Remember when we talked about entries, Jeffrey, and we said price loves to return to the large triggers, whether it's the large chart or the small chart? The gap theory is an awesome example of that, and it acts almost like a vacuum. You can hear a sucking noise as it pulls back to it. And then it helps you to be a little patient. Good question. And guys, if my answer ever doesn't make sense, do me a favor, tell me that it doesn't make sense. And I wanted to go back to Jen's picture here. One of the things that you'll see, and I won't call any names, but one of the things that you'll see on these chili dog trades, on these just jumping in once the back of the bar clears price trades, is quick profits. The idea that making $100, $115 a contract is really an acceptable goal. That a base hit is an acceptable goal, especially on something with bars as big as the NASDAQ. It was quick profits only. You were in at 79, right? And when you get to 99 up here, it didn't even get there, 80. Let me think, what's $100? 84 is $100 right here, Jen. So like 84 and change, it's quick because the cycle is that it tends to return. So these are just little snippets, right? These are just little bangers in between. These aren't meant to be home run trades. And now, but the flip side of that, Jen, is if you're in the trend trade and the expectation is the next area, then you find yourself holding through some of these. But if the trade you're taking is based solely on momentum, be willing to get paid quickly. Because what happens is you make 100, 200 over and over and over on these quick little hits, And then you get your trend trade, right? EMA, smalls through, right at the area, uptrend, maybe off of a zone. And then this is the one that you're expecting to get up to that next key area. Does that make sense? And this goes back to the idea that, guys, having expectations for the trade that you're in, understanding what kind of trade you're in sets those expectations. So if I'm in a trend trade, there's one set of expectations. If I'm in a 50-50, there's another. If there's a momentum trade, it's another. If it's an HVA, it's another. And the more trades that you add into it, the more likely you are to confuse your exit conditions or your profit targets. Great trade though, Jen. These are the ones that I just don't give back that much. And this is one of the reasons my buddy was asking me about taking these chili dog trades on the NASDAQ. And I was like, there's so many fluctuations on the NASDAQ. I love quick profits if this is the trade you're taking. And a little full disclosure, Jen, is if I'm in the perfect trend trade and everything is screaming and I've got $100 to my target, I have been known to chili dog it up to the target. Just add on 2 contracts and make a quick little hit on the way. And then the perfect example of when you call the perfect trade and greed takes over and you get stopped out for no reason at no place. And Gary, I don't know why you had a 76 stop here. It doesn't make sense. It's in between your target and the HVA. And it's really nothing more than you not wanting to give anything back. And they said, all right, don't give anything back. And then they did exactly what every indicator on your chart said. Guys, you have to have a plan for exit that's just as solid as your plan for entry. There's nothing worse than moving your stops arbitrarily, getting stopped out and watching it run. I did it this morning, Gary, so I'm not beating you up. I took the perfect trade and I let a stupid market flow chart talk me out of it. And I got out low tick and then it ran like a scalded freaking dog. It happens sometimes. Termination. I can't tell where you're doing what you're doing. 53. 53. So this doesn't have much to do with this anymore. This is odds favorable and a clear path. And it's just a trend trade. It's a pullback to support inside of triggers. Don't even need the other chart. And the expectation is the fib and you took it to the fib. Great trend trade. Great trend trade, Gary. Let's see where we're at. Marty. Strong triggers, nothing in the way, all good. Perfect entry, and that mofo got you. And then, all right, Marty, I'm going to beat your ass a little bit. That's an awful lot of blue fibs on that entry, isn't it? That's an awful lot of blue fibs. I want you to run a lap because you wanted to be in a trade. You didn't want to follow rules. This one was perfect. You were in at 13.9. Nope. You were in at 13.2 and they just got you. Sons of bitches. These are the ones when they get me like this and it continues down, I get back in. I'm like, that's just an unfortunate stop. I'll get back in and take it down to the fib. I love everything about this trade. It just didn't work. But you did it perfect. You want to see something crazy though, Marty? You're going to hate this. Is that your entry was this bar, a tick higher, which means your stop would have been a tick higher, which means it would have been a winner. And I don't know if it was hesitation. Actually, maybe not, because you got in halfway up this bar. So, nope, never mind. You're good. Just unfortunate. Just unfortunate. That happens sometimes. Your entry is perfect. Your stop is perfect. It didn't work. And then the second one was just a truckload of greed. And it got you. Trading into areas rarely works. That's okay. There'll be more. There will be more. weakening triggers into a strong trending market when you bought in. Buy the mid band and take it up to treble. Nice job, Andy. Guys, when you have 30 bars in the same direction and no reversal bars, and the triggers start to train track like that, as somebody calls it, there is some conventional wisdom that says keep buying the mid band until it doesn't work. And the first time it doesn't work, or you hit a termination, stop buying the mid band. And Andy, you did it perfect. You did it perfect. Hey, Sid. So what that means, Marty, is when this chart, hold on, let's turn it into a picture so that we can vandalize it a little bit. When this chart is 30 plus bars, so 30 or more bars with no reversal bar. Let's make that big again. No terminations. This is a strong trending market. Does that make sense so far, Marty? Everybody in the room? 30 plus bars, no reversal bar. This is a strong trending market. So every time it pulls back to the mid band, I'm going to buy that mother scratcher until it stops working. And typically, depending on the market, I'll give it about 8 ticks. I'll give it about 8 ticks of risk. So if you're not comfortable with an arbitrary number, one thing you guys can do, and let's just go to the entry chart real quick. One thing you can do, will this get bigger? Let's see if we can make it bigger. Is some people will say, well, I want it to go in the direction of the trade because that mid band's below the triggers and I don't really know if it's going to hold 100%. Some people will get in at the midpoint of the down bar as it's on its way up. Some people will wait for a full reversal bar in the direction of the trade, and that way the risk is established. Some people will just buy the mid band, boom, get in at the mid band, and say, you know what, I'll give it 8 ticks. It's worth 80 bucks. It's worth 50 bucks, whatever 8 ticks is to you, to take that trade. But what it is it's taking advantage of a market that's trending strong in the same direction. And the buyers have proven through 30 plus bars that's exactly what they're doing. They're hell-bent on it going up. And you're just looking for that trend trade until it stops. Cool. All right, so let's see what we have. Sid, are you ready? Sorry, I put you on the back burner for a second. So your buy stop is all the way up here. It's to you, Marty, trust me. So, Sid, are you looking for that chili dog trade here? Are you looking for that back of the bar clears an area, let's get in trade? I just want to make sure. Okay, cool. So let's talk about it. I just want to make sure that I'm looking at the right trade. So once the back of the bar clears these 1-to-1s, it's kind of all right. Actually, not really, because the mid band is behaving as a termination. So let's talk about that first. Do you remember when we talked about the gap theory? If I hit these areas and these are below the reversal bar marker, it has the potential to close that gap. That's kind of what happened here. Just so that you're aware of it. But you're absolutely right. When the back of the bar clears, if you're going to take this trade, it's right here at about 84.50 is the top of that bar. That's when the clearing happens. So over here, once the back of the bar clears this trouble, your entry is right about 84.50, right about 84.75. And you're not really entering this one with a buy stop. We're going boom, buy now. Just buy market, get in, we're there. And then the expectation is that you're going to hold that one until momentum goes away. So I like it. It's a great read. But yeah, on these, I'm literally, and it's funny, and I'll show you exactly what I'm doing. There's that S&P not getting through a termination. So let's say that I'm looking for that trade right here on gold. Wow, that's so fast. But the back of the bar clears, I'm just buy now. Just like that. I am 100% buy now. I have momentum. Maybe my target is a fib, right? Maybe I want to go break even into that fib. But, and I'm literally and I'm watching it, and I am hyper focused on this chart. I'm like, okay, if the back of the bar clears this fib, I've got my finger on I'm ready to mash it on the buy now. Right there. I like it. It's a good look, man. You read it. You read it well, Sid. But that'll save you from waiting for that stop in. You'll literally just mash the buy button. You're welcome. Thanks for posting in the room. It's good to see you posting again. All right. Jenny, big chart. To hell with your eyes, Mark. I miss us, Jen. I feel like we're growing apart. All right. Termination. Strong top. Triggers roll. Yep, that's a fib. Let's go to the next one. So it's directly into a termination. You're okay. I just like to give a little grief. You get on the reversal bar, and you get out of trouble. That's how you trade into a termination condition, right? No, you're okay. You don't have to put them together. There's the pullback, there's the confirmation, there's trouble, and you get out. And that one had no intention of stopping at trouble. The momentum ended up breaking and it went to the next area, but I don't know that you did. Why are you trading a one lot? Got you, Wayne. That's the perfect one lot exit. And then hold the second, right? That's okay. That's the perfect one lot exit. And then the second one is your runner. So I think the execution's nice. You did well. Wayne, I've got 3, 4. Got 4 for you, Wayne. So let's go through them. Odds favorable. Potential to break. So there is the JTFI, the jump in at the top of the move. Thanks for sharing that one, Wayne. Guys, it's common. Wayne's just like, man, if it goes, it's going, right? But if it doesn't, I'll take that small loss, and then I'll get in on the trend trade, and I'll make it all back. And this is beautiful. It's a great trade. No, I appreciate it. Jen, there's nothing ugly about that trade. It is the perfect management for a one contract scenario. Get out of trouble, get paid. And Wayne, this is perfect. Take the exit with the loss of momentum, maybe a little bit late. And then it's just a 50-50 trade. And then once you get above those fast triggers, and that's exactly what you did, it becomes pretty easy for you, and I like it. Great management on the first, it just didn't work. And then once again, 50-50, potential to break, perfect entry right at the areas inside of triggers, absolute textbook. And then when divergence prints, it exits. You were trying a loser trail stop and it closed when it wasn't working for 80. All right. That's okay. Divergence on a 50-50 is a pretty good reason to exit a trade. And sure enough, it was divergence on the 50-50 that ramped that thing down. So your stop was pretty fortunate there. Nicely done again, Wayne. Momentum, everything says down, potential to break. Once again, there's your entry inside of favorable large triggers. I don't know why you got stopped out there. That doesn't make sense. Oh, you got head faked. You got head faked. So guys, do you remember when I told you this morning, and I want you to see this. This is freaking awesome, I think. And Wayne, sorry you get to be the example here. I said there are 3 common entries that you guys are going to show me in this classroom that people are going to do. Hold on, we got one more. Were you guys here for those lessons? I think you were. And I said that there's 3 entries that people are going to take. And there is the one that is at the very top of the move, right? Hoping that momentum carries it. Nothing wrong with that. Is what it is. Whoops, don't need that. I said there's the one where you're afraid it's going without you, and you find yourself in right at the very tip of the one before it goes back to the area inside of favorable large triggers. And then there's the best one that makes for easy trades. And Wayne, congratulations. You showed each of those this morning. Fantastic. These are normal, guys. It's just a part of it. Needed to set the reversal. Yeah, like a tick below. So you had it at the reversal bar marker and it entered and went up. That happened to me this morning. And I've done exactly what you just said. I start going 1 tick below. I'm willing to pay for that tick. And then this one, everything says down. The market is cranking. The momentum is great. The path is not clear. You get in a little late. And you get out of trouble. Nice job. Great job. Wayne, great trading. I mean, great trading. You're what, about 2 months in? And you've got such a solid plan. You're so consistent at this point that you really do pretty much do the same thing every time and little variations on it. But your core, your foundation is rock solid, dude. 1700 yesterday. Nice. Very nice. Great job. Have an awesome day. I know you have to split, dude. I appreciate you posting, letting us look at what you're doing. And thanks. Sorry I had to use you for the lesson on the 3 different entries that are pretty common. All right, Gary, you take the first entry at the very bottom of the move into divergence and get stopped out. I'm not sure why you took that entry. I think those are where the best lessons come. And I always apologize if it feels like I'm beating you up. It's never the intention, but man, there's so many great lessons in the market. And you guys inadvertently give me pictures that lend themselves to it. And then Gary, you said this was a white bar trade. And I'm just going to believe you. But my white bar trades need these triggers down. My white bar trades need to be coming from termination conditions, not indetermination conditions. So you must have a different white bar trade than I do. And then that is just, I'm going to jump in and hope for the best. And when you hit Fibonacci support and closed on the wrong side, no reason to hold. Getting a little erratic compared to what you usually do, Gary. Just an observation. You're starting to look for all of it. And this is what your trading starts to look like when you get impatient. Just historical. I'm not sure if you're even in here listening. Did not enter here as we had a fib, 1-to-1s, waited for the back of the bar price to clear right there, and it did, but you didn't have the clear path. Buy when back of price clears. Clears what, Jen? And Gary, I could be wrong on that. Oh, 72 going to 75. Go swing them. Went to the driving range yesterday. So Jen, you cleared the 1-to-1s, but you didn't clear this fib. But I love your exit. Why not this fib? This fib doesn't matter. It's just the 1-to-1s. Just want to make sure. Should have been. Oh, it's because it's a 14-2. So Jen, if you were using a 13-2, then it would show up on your large. Let's see if we can rectify that so you have the best information. If you go to your large chart and you go to indicators, yeah, me too, Ron. Go to T3 Fibs, Pro Trader Synthetic New. And so your indicator 2, the Fibs Pro Trader, you would want this to be your 14-2. So on your large chart, you want your second indicator. That's where you would put in the 14-2, and that'll pull over your synthetics, and that way you'll have that consistency. Cool? You're welcome. Don't ask me how I learned that lesson. The exact same way. But that makes sense why you didn't worry about it then. Makes perfect sense. And we saw Wayne's. Andy Man, this one's from your last, just making sure Marty got this strong market look when the smalls ride the large. Oh, thanks for that, Andy. So Marty, this is how great this community is. And I don't know if Marty's still here. I think he split. Nope, there he is. When you start to get that train track look, the smalls on top like that, that's your market letting you know that you're in that strong trending market. Right there. 30 bars qualifies, but that look kind of cements it home. Cool. Thanks, Andy. And then Gary, let's see where you got in, 522. So we're in up here. So you had the termination. And there's your white bar and your entry. Then your white bar trade turns into an HVA trade. So you take it again and down there. Gary, this is the Gary that I know. That is the Gary following the plan. Nice job, dude. I like that one. Poop in a group. I'm glad I'm not the only one that says that. Nice stuff. All right, guys, so that's the end of the second hour. We made it. Holy termination condition, Batman. Seems to be working. All right, so there's that crude oil. Odds favorable, clear path. Some of you were waiting for the back of the bar to clear that divergence high. Should we try that chili dog trade? We've cleared all the problems on the large chart. The momentum is strong. The path is clear. There's room to the targets. I just need the back of that bar to get up above this one. And it may have already done it. And then spiked a little bit. Is everybody with me? This is the chili dog trade. So Sid, this is the one where I don't even worry about a buy stop. I'm right here. And when this bar prints, I'm off to the races. Give me that next bar. Give me that clear path. Boom. There we go. Does that make sense for you guys that are chili dogging? Momentum, path, clear all the problem spots, mash that button. 7 ticks. And now there's just nothing for me to do. It either goes or it doesn't, right? It either makes it or it doesn't make it. It either wins or it loses. Did you guys know that I'm not in control of whether or not it wins or loses? I have no idea what's going to happen next. Don't even care. Watch this. Termination reverses the market right to that termination. Dag nabbit, carn it. Termination on gold still seems to be holding. And we're doing all right here so far, right? 11 ticks, $110 is the goal. That's it. Does anyone watch these fluctuations and let it drive them nuts? You're in that one? You guys ever stare at those fluctuations? You're like, oh, it's making me freaking crazy. Do that. Make it so you can't see it. Guys, it's either going to win or lose, right? It's either going to win or lose. Nanda, I'm not sure which direction you're going on the ES, but good luck. Did you see that big ugly termination condition? You were in the 50-50 trade? All right. What a great spot to get paid. It's either going up or down, Rob. That's the only thing I've ever been sure of in my life. I've never seen it go left. Ever. So for you guys looking for other trades, I made this for you if you're interested. These are really all the trades that we talk about in the room. And of course it starts with the high probability trend trade. And then guys, there's what we call an HVA trade. And then there is a momentum trade. And then there's that one you guys do, the one that we just did, the JTFI, the old jump in, back of the bars, do what they do. I'll drop that in the room for you. You got it on your desk, Morgan? I like it. Look at the dance. Ugh. Drive you nuts, won't it? Guys, I'm not going to manage this one. I'm going to leave it alone. It's either going to win or lose. And I'm going to go take a couple minutes. I'm going to stretch my legs because I'm out of control at this point. There's nothing I can do. So I'll be back in 5. Hopefully a pleasant surprise. Sickening, ugh is right. It's hard to watch it just dance, isn't it? I like these things to just run. I really do. It makes me feel so much better. There's one problem with this trade, is my smalls are on the wrong side of my large, and I just realized that because I kind of jumped in. This isn't my best look for momentum, is it? But you know what I like about this trade? Is the sellers tried and failed and pushed back up. 4 trades, 3 on pullbacks to the mid-band, 1 from momentum, clear path. And you know what? That doesn't suck. $2,400 isn't a bad day, Iron Mike. Whew. I hope I make your Christmas card list. Guys, I'll be back in 5. Go stretch your legs if you're not managing a trade. We'll see what happened with this one when I get back. See you in 5. crashed. Did you guys see that? Who did that? All right, so I'm going to reload that. Can you guys hear me? You can hear me. Ninja Trader gnomes. Strong top. 50-50. You enter at the reversal bar marker on the way down. First exit at trouble. 3 divergences say exit. Exit 2 was above break even. Jen, did you just not follow your rules for the third divergence? Bad exit. Okay. But I like that you annotated it, and I like that you went through and you talked about it, so hopefully you can avoid it next time. So it was this 50-50. 1 divergence is bad. 2 divergence gets pretty catastrophic. 3 divergences is just death, right? And I know that you're working a little different plan and you're working into this NASDAQ a little bit, and I agree that maybe you could have done that one a little bit better. That's okay. Am I connected? Looks like we didn't win that one, did we? Did we take a loser? Okay. So what was the lesson? I didn't notice it in time. Small's on the wrong side of the large. So it wasn't really a momentum trade, was it? That was that damn siren song getting me in. That's why I don't call trades in the room, guys. Because my focus isn't making money. My focus isn't following my plan when I'm teaching the room. My focus is education. So everything that I do is on simulator, and the educational value of this one was that I don't have odds favorable momentum, which means I can't take a momentum trade. And I am not infallible. And I know that that comes as a shock to a lot of you. Because let's face it, I'm pretty neato some days. Let's load up the S&P. Guys, we are in the last hour here. This is where I really love it. If you guys give me an opportunity to answer your questions. So I'm going to put a couple of you on the spot, if you don't mind. Bob B. the Man. How are we doing? I know you watched a lot of videos, and now we're starting to see things live a little bit. Is it starting to piece together a little? And guys, it really is. It's like drinking from a fire hose in the beginning. I want to make sure that you're not getting left behind, guys. That's for everybody. And I don't care if you're on day 1 or day 1,000. Starting to make sense. Awesome. Remember, if you have a question, all you have to do is ask. My goal is to help, Rob. Means I'm not perfect. Means I'm not perfect. There's a million questions, and I don't always know what question to ask, and a lot of people are like that. So, yeah, we got to get that computer to you for sure. It's good, though. I kind of like it. There's a couple people in this room that started watching and learning and talking. And, man, you don't have to be in a trade, Bob, to ask a question. You don't have to have the simulator up and running. So don't feel like just because you're not trading, you can't get some clarity on stuff. And what's cool is once that trading computer shows up, well, then you've got a little head start. And Nanda, they said, oh crap, we forgot to get Nanda at the right profit spot. Let's give him another shot. We'll see what happens. I'm not sure if you're still in that short or not. And guys, I guess the lesson here is that weakness is problematic, isn't it? Weakness can create challenges when you're looking for a momentum trade. And that's exactly what it did. That is precisely what it did. So it happens. What do you guys want to talk about? You want me to just talk about random stuff over and over and just hope that I hit the lesson that you guys want? I'll do this one. Let me go to my stuff file here. I'm gonna do this one. When it hits 60.65, I want to see where 60.65 is. I love that. Great exit, Nanda. Great exit. So check this out. For you guys that are doing new stuff, those checklists that I gave you, this is how they were all created. And this is how you can create your plan outside of the simple plan, outside of the basic plan, guys. And each time I add a new trade, a new look, a new scenario, I need to make sure it's repeatable and testable. And my results should produce a trade that has been proven to win more than it loses, therefore providing me a statistical advantage. It doesn't happen from 10 trades. I need 30 to 50. So this is how you're going to end up building your plan. And guys, I want to show you, true story. This is how I build my plans. There's the last one I built. There's a checklist, there's pictures, there's the idea of everything that I'm doing, and I just do it. Pick your trade, find your pattern, start taking pictures, make sure that it wins more than it loses. Know what you're looking for. I'll drop this in the room for you. So if you're doing anything outside of that high probability trend trade, this is a great way to do it. And then the cool thing is you're always cordially invited to share your plan with me. Hey, Bob, have a good one, man. You're always invited to send me your plan, to send me pictures of your plan being true. I'm happy to give feedback on it, always. Makes me happy. Andy Man. Na, 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 na. Odds favorable, 50-50. So you took it as a momentum trade. It turned into a trend trade. And you said, whoa, this is a 50-50 with divergence. Let me get paid. Nice job. Well, Andy, in your defense, you took it as a momentum trade, and that divergence hadn't printed yet. It just turned into a 50-50 with one divergence from a termination. Perfect. And then check it out, guys. There's that gap theory again. This is a nice trade, Andy. Does that make sense, though? You were in before divergence printed. Yeah. You took it as a momentum trade. And it just turned into a trend trade. We talk about following rules a lot. I'm going to share this one. If you've ever spent any time in the other room, in the trading room, you've seen a gentleman. His name's Siva. And Siva's been with us for, gosh, 20 years. He's an amazing trader. He's such a good trader that he trades 9 months out of the year and takes a 3-month vacation back to India to go be with family. And just takes 3 months off. And I think he's in that right now. But one of the things that he realized is that the biggest challenge for new traders was just following rules. And that's going to be the hardest thing, guys, is learning the rules isn't difficult. Executing the rules isn't difficult. Doing absolutely nothing when the rules aren't met, that's where the challenges come in. So he created this penalty box for himself. And if he missed a good entry, if the rules were met and he didn't take the trade, he had to get up and walk away from his desk for a minute. And if he entered late, 2 minutes. And getting out for no reason, 3 minutes. And moving a stop to lock in profit. How many times have we done this where we're like, oh, I just don't want to give it back. So let me put my stop in the middle of nowhere. And guys, that's a 5-minute get out. And these go up higher in time because these are more costly mistakes as you go. Exiting late and giving up the most profit. Jen, run a lap, 7 minutes, right? Trading against an area, losing into resistance and short into support. We've seen that today too. 15 minutes. Why? Because that's an account killer. Trading against area and direction, you're done. Get out of the room. And this is what he created for himself. And I thought this was brilliant. Because if nothing else, having something like this written out and put on your desktop, it reminds you how important following your rules is and should be. And that was pretty cool. I'm just sharing everything I have now. There's Nexgen's trading plan. Define your termination. If it's true, look for your HVA, look for your momentum, look for your white bar trade. After that trade, that one happens real close to your termination. Strong everywhere, sell a pullback, go to the next term, rinse and repeat. Go the other direction or it breaks and you go back to number 3. That has been timeless, guys. That's been happening forever. And then this one, I love this one. This is the Mark Novak story. This is my autobiography given to you in interpretive dance. When you start with the software, it looks like fun. You're like, oh, I'm going to be a day trader. I've seen Wolf of Wall Street. This is going to be awesome. And then you realize that you have to learn. And guys, most of you are in denial that you'd actually have to learn something to be successful with the software. I know I was. And then you're like, oh, I'm not sure what I'm doing, but I'm getting lucky. I'm breaking rules and I'm getting lucky on Simulator. And now I'm a pro. I'm 30 days in and I'm a pro. I'm 1 week in and I'm a pro. And this is where people go live. And guys, if you're going live and you're not sure why you're doing what you're doing, that's what happened to me. And this was my fall from grace. And this is after you lose $5,000. And this is literally my autobiography. And guys, it took me 21 trades over the course of 2 hours, not one winner, and I lost $5,000 in 2 hours. I blew out my entire account because I had no idea what I was doing, and then when I wasn't winning because I'd gotten lucky on Sim, I was mad as hell at the market, and I was going to show it, and it drained my account, guys. And I ended up at the I don't know shit stage. And most everybody gets there at some point. And this is where you have to make decisions. This is where you have the realization that Nexgen gave you everything that you needed to be successful, but you probably didn't follow the plan. And this is where you have to commit to following the plan. And then you start that road up, guys. And it's a road and it's a journey. And you're like, oh, okay. Now that momentum, that clear path, well, that makes sense. I wish I had just done that in the first place. Now these entries make sense. I wish I had just done that in the first place. And then you're like, oh my gosh, did I just have that great day? And then you did. And guys, this is a very normal part. And the I don't know shit stage is going to test you. That's where I lose people. And I don't lose people because the software doesn't work. And I don't lose people because I'm not good at relaying how to get the most out of the software. And I don't lose people because the rules don't work. Guys, I lose people when they choose not to learn how to use the software, when they choose not to do the drills, when they choose not to follow the plan, when they choose not to give themselves an advantage going to the trade. Because they'll tell me, this doesn't work, it's not for me. And guys, it's not that it's not for you, it's that you have to readjust your thinking. And I had a gentleman once call me. We're just going into story time. You guys aren't giving me anything to do, just heads up. I had a gentleman call me, and he said, for lack of a better term, he goes, Mark, you're full of crap. Nexgen's full of crap. And everything that you teach every day doesn't work for shit. And I said, okay. That's okay. Like, it doesn't bug me. It doesn't bug me at all, guys. There's so much snake oil out there that I want you to be suspicious. I really do. I want you to be suspicious. I want you to prove me wrong. And I said, well, let me just share something with you real quick, my friend. I said, one thing that you haven't done since you've been with Nexgen is you haven't posted in the room, right? You haven't given me the opportunity to help you to make sure that you're good. I said, so do me a favor, send me 5 or 10 of your pictures of your trades that you took that fit the rules and they just never work. And he goes, okay, I will. And when he sent me the pictures, guys, it was 50-50 trades and it was high probability trend trades. What we realized is that he had no freaking idea what defined momentum. He had his own version that he decided was true. And he didn't understand termination conditions, but he had created his own version. And Nanda, you'll remember this one. He thought that if price just peaked over a fib, just a little hair over a fib, that area was now broken. And guys, that's common. But he didn't understand this. He didn't understand that. He struggled with this. And he was finding all the losers. And I said, you know what? That's no problem. We have a fix for this. So we worked together, and he came to my classroom for a week, and we redefined momentum for him. And we made sure that he had an understanding of it. And he asked great questions. And we redefined termination conditions, and we cleared some things up on the difference between having a clear path and only the potential to break. And we talked about the entries and how the entries for the high probability trend trade aren't the same as the ones from the 50-50. So when we cleared up his misconceptions, and I'm telling you guys, it took 4 days to do it. So I'm talking to Em and Jeffrey and True 29. You guys think that it's going to take you forever to do this, but it's not. If you keep it focused, once we cleared up any misconceptions he had about the rules, he went to finding trades that fit the rules. And he traded this KISS plan verbatim. And I told him, I said, give it 5 days. Give it 5 days because trades win, they lose. It's a normal part of trading. And he called me back about 7 days. So it was 5 trading days. He got through the weekend. And I heard from him on Monday. And this is what he told me. And I'm paraphrasing because I don't remember everything verbatim. He goes, you know what, Mark? He goes, it's not that the software doesn't work. He goes, I didn't take the time to learn how to use it properly. He goes, and I really sabotaged my progress by not asking for feedback in the room. He goes, but once you cleared it up for me, once you answered the questions I had, once I was versed in these very 3 basic rules, he goes, they happen all day long. You just got to take the right ones and stop taking the wrong ones. And to my knowledge, he's still trading successfully, and this is what he's doing every day. He checked in for about a month. And every week he would go, okay, I had another week and I was at 80% winners. And I had another week and I was at 93% winners. And this week was only at 78% winners. And then I just quit hearing from him, guys. And that's my goal. My goal is that you fire me. So all that being said, and I know it's super wordy and I'm just flapping my gums, there's a way to get to where you want to be, guys. There really is. The software works. I say that unconditionally. You just have to learn how to work it. And that's where I come in, guys. The whole idea is understanding what you're doing right and wrong. Give me the opportunity to clarify things, right? And I tell everybody that on day one, don't I, Marty? Send me pictures of what you're doing so that I can see how you're reading your indicators and make sure that you're reading them properly. And typically what you guys find is when you finally send me pictures is there was a little bit of a misconception. Andy says, check it out. Momentum and path. Beautiful. I agree. Pull back to support. Make some money. Did it again. Make some money. Make a hundy. Guys, I'm not good at a lot of things in my life. I'm really not. But I'm pretty good at teaching people to read indicators. I just have to know what you see so I can make sure that you're seeing it correct. That's it. That's all it takes. If you think, one of my biggest things, I'm just going to watch the videos, Mark. If you think that you're going to learn how to be a day trader from watching videos, you don't think it'll help. It's a good supplement. But guys, you're not going to be a better golfer. You're not going to be a better golfer watching videos of Tiger Woods. You're not going to learn how to play tennis because you watch Serena Williams, right? You can supplement, Guys, this is one of the best ones for you new users. This is the 60-second video series. And this shows you trend trades long, short, defining the market trend, terminations, entries defined, studying trend trades, day trading made easy, large time frame analysis, pivot stops, all of them. Gap theory. Well, if you watch Lee Trevino, you'll probably be better, Andy. But that's like the exception, not the rule. So it's awesome to listen to the room, guys. It's amazing that you guys are here. I absolutely love it. But what I need you to do is get a little feedback. Jeffrey Dean, you just bought a new golf bag so it'll look good shanking right when it's dog left. Yep. Amen. But new stuff makes you play better, and new shoes make you run faster. Bring it to Austin with you, Jeffrey. If we're not snowed in, I'll meet you in Lago Vista. We'll go play around. Lago Vista has about 50 deer on it for every hole. It's one of the most beautiful courses around here. And it's right on Lake Travis. There you go. It overlooks. There's holes that overlook Lake Travis. I know you're going to be on Lake Travis, so depends on which side you're going to be on. So guys, that was my big sermon. Give me a chance to help, and I will. And there's not a lot of stuff that you can break that I can't unbreak. S&P. Crude oil's trying, isn't it? So there was momentum and path. And if you took the entry at 91, they might have gotten you, right? Marty, have a good one. Jen, odds favorable, 50-50, pull back to the area, out, nice. So Jen, I'm going to share something with you. There's this combination that you have going on right now between what you learned in the Ale class and what you're learning in real life, if you will. And you're managing an Ale entry like a medium probability trade. And what I've found is the methodologies are close but not exact. And sometimes it makes sense to take that good entry. To have less risk going through. So when you're combining the two, and you're just in the learning phase on it, and you'll be good. There's this point where you've got to lean on Nexgen, and there's a point where you've got to lean on Ale. And the zones have a lot to do with it, if that makes sense. And we can talk on the side, because I don't want to give away secrets if you want. But there's this mesh that happens. And I guess that's it. Well, let's look at it from a Nexgen standpoint, 100%. Momentum, and I think you were in, where was it? 78. So this was it right here where you have it circled, right? Momentum, potential to break, everything says down, the areas are almost completely broken, and you get the perfect pullback right to mid-band, right to resistance, right inside of favorable large triggers, and it's virtually no risk. Excuse me. Sorry about that. And that's a good one. Oh, Morgan, have a good one, man. Right? That's just a beautiful trade, isn't it? And Jen, did you notice that your EMA didn't make it to the mid-band, that your small triggers were days away? So that's not the best entry that you're taught at all for the ale. Does that make sense? So for me, if this isn't giving me the best entry for one plan, maybe I'll go to the one that's been proven to work. And then when I do get that perfect entry according to the other plan, so it takes a minute. It really does. And for those of you that don't have any idea what I'm talking about, I apologize. There's a course called ALE that's taught by a 17-year Nexgen veteran. And it deals with a lot of areas and mentality, and it has a little different plan. And Jen has taken the course, and I've taken, well, I got a 1-hour run on it, but I kind of used my chart reading to help out a little bit. So I like the trade, and I guess that's all I can say. I think you managed it beautifully. You did a great job with it. But those are the things that you begin to think about. Cindy? Okay, cool. Which is weird, Jen. That would make you the first woman in the history of my life to understand everything that I'm saying. Yeah. Cindy, weak triggers, risky entry, profit protected. Did you just get bored? You're like, you know what? F it. I haven't caught a trade the whole way down, so I'll wait till we get just above support and then I'll do it. I don't know why you did this, Cindy. I don't. I'm glad you won. And guys, boredom trades are very real trades. Boredom trades happen. Boredom trades spring from not getting your rules met as quickly as you'd like. And you're like, oh my gosh, everything's red. I'll just jump in and hope for the best. And sometimes the best happens. So there you go. There's a good example. At least getting in above it, reversal bar off the mid band, everything down. At least then you've got a little room to manage. I like that better. Or there's your momentum style trade just from the other side. Never again. Don't you lie to me. Don't you lie to me. We all do it. I don't care who you are. We all do it. If you say you don't, you're probably fibbing. True 29, how are we doing? I know you're new here. It's a lot to take in the very beginning. Guys, I always welcome your feedback. I really do. I don't mind private messages saying, hey, Mark, you're going too fast. Hey, Mark, will you cover this more? Hey, Mark, I like what you're doing. Let's keep doing it. Like, I love to hear it. I love the feedback. I always remind new users that this is kind of what it's like. Awesome. In the first couple days, True, it feels like you're drinking from a fire hose. And then what you find is right around day 3, it really seems to click. And that's when people really start to find their advantages and really begin to read their charts a little more. So don't be shy. If there's anything I can do for you, and even if you don't want to post it in here, send me a message. I want you guys that are new to the software, I want you to be real vocal if there's something that you feel like you're not getting. And that's true for you guys that have been with me for a long time. If you feel like you're not getting something that you need, make sure you let me know. Guys, I have changed the curriculum in this course 100 times based on the feedback from you guys. So do it. Do it, do it, do it. Looks like NASDAQ was going gangbusters today. Hopefully they keep doing it after lunch. Hopefully.